I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh,
We got the mobile version now, remember that?
oh, that's right. Edgefinder
Yeah,
Mobile.
yeah.
Yeah. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edgefinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good morning, guys. Welcome back to another live stream. Let's pick our intro music. Hold on. I've got a soundboard in front of me for all the new people, as it is a okay. I'll take it. Can you guys hear the soundboard? That'd be really awkward if I'm just like bouncing the head to something you can't hear. Anyways, today's CPI day, and arguably, I feel like I say this for every CPI report, but today's CPI report is really pivotal. I would say, I know, again, I usually will say with each CPI report, I'm like, this is really huge. This is really important. It's always really huge, really important. But here's something that's really key about this CPI report. We have a scenario right now in which case jobs data is pretty convincingly starting to slow down. We see unemployment rate rising in the US. I'll show you some stats in a minute, but take my word for it for a second. We see jobs data coming in soft, okay? NFP, ADP, we see unemployment rate, we see jobless claims. We see these things on the rise or on the fall, if you will. At the same time, where are we at with inflation? Because, guys, here is the key. If you want this to all kind of pan out okay in the end, if you want to see stocks higher, the U.S. economy stay strong, stay on top, and that's good for global growth too, not just the U.S. If you want to see global economics continue to look prosperous, we need to see something happen today. We need to see inflation continue to come down. Now, what I mean by that is right now, inflation has showed just some progress of slowing. It's not remarkable. It's not awful. It's somewhere in between, in my view. Okay. So if we have jobs data coming down, okay, that's fine. Jobs are not in a bad spot, but they could get it to a bad spot if things on the interest rate stuff doesn't change at some point in the somewhat near future. The jobs data overall is pretty strong overall. It's just coming down. Now, it's like this, right? It's coming down. But if it doesn't get some, pause in the form of lower borrowing costs and a, rebounding economy at some point, this could actually accelerate. That's the concern for the Fed. We're not here. I'm not saying, oh, jobs market is crashing, but we're like here, right? So we need to see inflation come down in order for finally interest rates to come down. Okay. So the question, once you start piecing this puzzle together, you say, oh, so CPI today is really important. Because what happens if you get this? What happens if you get this? What if you get inflation going up before we even cut interest rates? No bueno. Not good. Because in that case, what you have in that scenario is you have stagflation, right? We don't want to see stagflation unless you're long gold. But, stagflation could be really concerning because then you've got, oh my gosh, the jobs market is slowing, but inflation's not going anywhere. The market does not want to see that today. I can tell you that right now. The market does not want to see inflation surprise to the upside today. They would hate it. The NASDAQ, S&P are at all-time highs. They want to see inflation coming down. Now, are we likely to see inflation coming down from the previous number? Yes, very likely. Because, let me pull it up here for us. CPI year over year was 3.3% previously. We're forecasting for 3.1 today. We get that figure in 9 minutes together. We'll be watching that. And I just want to invite you, as we wait for the numbers, do me a big favor, hit the thumbs up button on the stream. Appreciate you being here with me, and let's watch CPI together. Please remember, don't go gambling on this stuff. I've been doing these streams literally for years. I've reported at this point probably, I don't know, maybe like 50 plus CPI reports. I've done it many, many times. And every time there's somebody in the audience who's like, they're rubbing their hands together, I'm going to get rich, and then they gamble and they lose a bunch of money on CPI. Don't let that be you. I'm telling you, I just put out a tweet about that this morning. Trade safe. If you're trying to cheat the system will blow your account. I'm telling you right now. If you don't know what you're doing, you don't understand fundamentals, you probably shouldn't trade around them. If you understand them, if you have a decent grip on what CPI means for the story, then you might have something, right? Then you can actually use CPI like we do on the stream. Okay? So we're about 6-7 minutes away now, and we've got CPI coming in hot. It's going to be a big, big figure. Very, very important to this market. Now, where am I at? Where am I positioned? Please understand, when I tell you my positions, I am not telling you, I just YOLO'd into this with 7 minutes to go to CPI. That is just irresponsible. That's not what I did. I've been long gold for a few weeks now. I'm a swing trader predominantly, and I use fundamentals. So swing trading plus fundamentals is, I feel like, a natural coalition. However, day traders can also use fundamentals for sure. They're a day trading catalyst. Like, for example, if you get a really hot CPI today, or a really cool CPI, really good CPI, there's some day trades that certainly can be played on that. Don't get me wrong. I'm just personally a swing trader. So I'm long gold. I'm also long, not the NASDAQ, but the technology sector, XLK. This is a position I've been in for, well, at this point, months. This is a kind of a longer term swing trade that just keeps going, and I trail stops. So when I have a good trade, I could stay in the trade for weeks, or in this case, even months, which is rare. I don't usually stay in trades that long. I'm usually more active than that, but I've been trailing the stop on a daily chart. And who am I to call it the top? I've been surprised by this technology move, but I can't say I'm disappointed with it because I've just been trying to ride it for as much as possible. Anyways, we've got the NASDAQ coming in here at an all-time high, the S&P 500 all-time high, just about prior to the CPI report. To say that the market is expecting progress on this inflation today would be an understatement. We are needing it. The market needs to see inflation come down. Otherwise, in my view, if you get a hot CPI number, we probably shouldn't be trading at all-time highs. And in fact, I would say I'm not going to short the market because it's a strong bull market right now, and I just find trying to short this thing not a good strategy in general, especially when it's in a bull market. When you're in a bear market, it's a different story. There might be setups, but in this raging bull market that we see right now, I personally don't want to try and call a top on it. However, if we get a bad CPI number today, we very well may go into a consolidation phase. We might pull back to prior support. So please understand that the S&P and the NASDAQ are, in my view, a little bit sensitive, well, very sensitive to a hot CPI print today. Gold, like I said, I am long. I've got a stop trailed below this low. If we see gold completely fall apart today on a hot CPI print, which is likely what would cause that, it would be a really hotter than expected CPI print. again, we're expecting 3.1 today. Let's say we get 3.2 or 3.3. Gold would not like that, right? Nobody knows. I want to say we've got 4 minutes to go here before CPI. I've been doing this a long time. I can tell you, nobody knows what CPI figures are going to come out to be. So trying to guess which direction gold is going to go in the next few minutes, to me, is just pure gambling. We don't know. What we do here on this stream for years now is we wait for data to come out, we add it into our fundamental bias, and then we base trades around that. Now, we use simple technical analysis. We keep it really straightforward on this show. You know, when I'm talking about my trading, I'm not using liquidity sweeps or fancy, voodoo magic strategies or anything like that. We are just talking simple technicals plus a thorough understanding of how the market actually moves based on fundamental analysis, the macroeconomic data that moves the market. So inflation today is really important, and it's going to go into our top setups calculation. Inflation, by the way, guys, if you're an Edgefinder user, you might see some serious swings in the score of the Edgefinder today, because inflation is going to come in here and it is going to either wreak havoc on some of these scores or it's going to change things around. So, right now with inflation today, we've got to see really good numbers for gold not to lose some score. We got to see really good numbers for silver. We got to see, for the S&P 500, we could gain score here today. So we'll see. Inflation numbers come out in just a few minutes here to go. And it is, again, like I said, a very, very important figure. Don't go anywhere after the spike. This is the last thing I'll say before we jump over to the charts and prep here. A lot of people will leave right after the spike. What I'm trying to get to you, if you're new to these streams, we don't just watch the spike like it's fireworks on the 4th of July. We watch the spike because it's fun to watch the spike, don't get me wrong. But we actually try and take into account what the data tells us about the market, not just watch the fireworks, right? Real traders, real investors on Wall Street, they're taking in this data and they're making decisions on the data with the understanding of how the economic data impacts their trades, their ideas, their biases on the market. Are we going to get inflation progress? That is really, really important to this market, sustaining the rally or fizzling out. When I'm saying the market, I'm talking about the S&P 500. When we talk about the dollar, right? The dollar's been on a weak trend here. If you get a tick up in inflation today, the dollar might find a way to push back up. Or, and again, this is why we're such a pivotal spot with just a minute and a half to go. The dollar index could, if it comes in cool today, it could finally break this upward trend and perhaps make a move back down to the 104. Personally, that's what I would prefer, but the market doesn't give two nickels for what I care or what you care or what your bias is. The market cares about what the data comes in as. That's why we're going to kind of stay quiet here and watch the data together. So now what I'm going to do is I'm going to switch over to our all markets view so that we can keep an eye on all the different charts that we all know and love. We've got gold here, top right, euro, pound, oil here. We got the S&P in the top left. We got the Dow Jones bottom left, NASDAQ left, and the dollar index right there. We're going to watch to see how all of this data comes in. And again, don't go anywhere after the spike. A lot of people will leave right after the spike. We call them the spike junkies here on the stream, because people who just come for the fun and then they leave. That's more the gambling crowd, and you'll see it. The numbers of the views will go down after the spike. It always does. But don't be one of them. Stick around. Give us a chance to really actually look at this data and make some decisions based on it. It's where the fun is. Again, it took me some time to learn that, but fundamentals are the fun side, right? You understand the story of why this market is moving the way it's moving, rather than just, charts materializing in front of you. Anyways, we got 20 seconds to go here, guys. Let's go ahead and roll our breaking news. All right, CPI numbers should be coming out in just a moment. About 5 seconds to go. All right, CPI numbers did come out. We've got S&P moving higher, the Dow Jones moving higher, NAS, Euro, gold. My goodness. What did we get here? That must have been a good figure. I'm going to guess 3 year over year. Wait, look at the price. Yeah, I'm going to guess 3. Let's see if I'm right. 3 or 3.1, I suppose. 3. There it is. 3. Okay, so the CPI number came in at 3%. That is good news. Good news, good news, good news. All right. I'm not going to lie. I'm going to take a moment here, guys. I apologize for the boasting that I'm about to do, but this is all correct on my positioning. And I'm not always correct on my positioning, so please understand. But right now, all of my 4 trades all look to be in the correct. My thesis here has been correct. Now, I'm saying that because I'm not always right, but this thesis that I've had in the recent few months has really been killing it. Rate cuts probably on the way. A lot of people are not in that camp, but with a 3% inflation reading, what we just saw unfold is a likely confirmation that September rate cuts are probably coming. Okay, the first rate cut probably coming. We're up 39,000 on the technology sector. We're up 19,000 on gold. We're up 2,000, 1,800 on TLT and 1,200 on silver. That is the record amount of open P&L I've ever had on my account. So sorry for the boasting for a moment, but it's kind of surreal. I've been doing this for years, and when you reach new highs in your trading, it is even after doing it for 8-9 years like I have, it's still a humbling moment to think back on, like when I was in my college bedroom with a junky PC trying to figure out how to trade. Thank you for the congratulations. Appreciate that. Yes. Anyways, yeah, so gold pushing higher, really strong move there. We are tapping on the door of 2,400, and there goes gold. I mean, that is remarkable. NASDAQ, S&P up 0.3% on the day. The Dow Jones up 0.3 as well. And as you might imagine, the Russell making its move. And if I miss the move on the Russell, I'm going to go pound some bricks because, the Russell's been the trade that I've wanted for some time, but it's okay. If I think if I miss this first move, if this becomes a bigger move, there will be chances to get in on it. I've talked about this for some time. The Russell is a trade I greatly want to not miss, right? Because the Russell is small cap companies. They've significantly underperformed the S&P 500. And with today's inflation number coming in pretty unthreatening, right? Non-threatening. I mean, that's a good 3% is better than expected progress on inflation. Meanwhile, jobs data is coming down. We are probably going to get rate cuts. You know what's going to tell us that we're going to get rate cuts? Yields. Here's yields right now. Yields are going to tell you that's rate cut city right there. Welcome to Rate Cut City. Good chance that we see rate cuts now. Why? Because now you've got cooling jobs data and cooling inflation. That's a couple months in a row, guys, that we've seen inflation coming in soft. This is what the doctor ordered. Okay? So inflation coming in soft today, labor data not crashing, but coming down. It's hard not to consider maybe there is a soft landing at the end of this tunnel when you see this. Now, the question, though, the last part is, why is gold up 1% and the S&P is up 0.3? Because there is a chance that it won't be a soft landing still, right? And this is why I've chosen gold as my biggest position instead of the S&P 500. If you think rate cuts are coming, why not just buy S&P? Well, because the consumer is feeling the pinch and unemployment rates are rising. Is it possible that turns around and improves with a rate cut? Maybe. But is it also in the historical records how it usually pans out? No. Most of the time when you start to see rate cuts from the Fed, it is usually the sign of a recession. Not always. Like 1995 was not the case. But welcome to Rate Cut City, in which case, whether we go into a recession or not, I still like gold. Okay, gold, silver, staying long on those ones. Those are, again, just becoming winners in the account. And I mean, I have to just I have to bask in the sunlight for just a moment because it does feel nice to be vindicated on the gold idea. I've been waiting around for gold. You guys have to understand, we're seeing the move, but I've been trading gold on the long side through all this chop. So I've had losing streaks within there. I've had periods that have just been super boring, waiting for gold to make a move. But with jobs data cooling and inflation coming in, the Edgefinder has been screaming bullish readings on gold. And I've stuck to that idea, found my entries, managed my risk, and we're getting rewarded for it today. Speaking of the Edgefinder, if you guys are regular fans, got something for you. It's CPI day. And with CPI day, we're doing a big sale on the Edgefinder. If you guys want 55% off the Edgefinder, let me just use this as a testament to say something. When you see people on social media and they're selling a product in the trading space, I know everybody kind of wrinkles their nose. They say, what's that about? So my background is in computer science. I'm a software engineer by trade. That's what I did before before I was trading. I was programming, and then I got into trading. And with trading, I've always brought my programming interests with me. I'm not the best coder in the world, but I love building systems and working with coders, and that's my career path before trading. So when I got into trading, I started building tools to try and help me, to try and back test, to try and, I wrote MetaTrader expert advisors all day long, and, indicators, and I carried over into the fundamental side, where I realized there's not tools out there. There's so few tools that help traders with fundamentals because it is such a comprehensive topic. So many traders want to use fundamentals, but they're so burdened by the idea of trying to learn them. They're like, oh my gosh, once you open that book, you realize it's as thick as the Bible, right? It is a super comprehensive concept to try and learn fundamentals. I'm still learning them today. I've been doing it for years. My point with this, though, is that if you are somebody who is aspiring to use fundamentals, and you'd like a tool that assists you with them, almost like an AI that helps you read through the Edgefinder or the economic data. The Edgefinder is that. The top setups algorithm, what it does is it looks at all of this data, all the economic data, all the technical tools that we use, like seasonality, right? Months of the year that are typically bullish or bearish for different assets. It looks at the sentiment, it looks at the commitment of traders data, so we can track what institutional money is doing, right? So if I go over to the COT data, I can pull this up, and I can look at what institutional money is buying or selling on a week-to-week basis. We've built the tools using software to help dumb down, if you will, for myself even. I'm not saying people who use this are dumb. I use it every day. Dumb down the data because it's so much to look at. But if you have a tool that helps you break it down, color codes it, makes it simple, it's a game changer. The investment of buying an Edgefinder, if you are trying to get into fundamentals, is a one-time payment to get access. And today only, it is 55% off. If you'd like a copy for 55% off, we're going to be dropping the link here in the chat. If you'd like to get information on that, again, this is a very short-term thing. So please, if you are thinking about it or you've thought about it in the past, if you want to jump ship and get on the SS fundamentals, check out the Edgefinder. Again, it is 55% off using this link that's been dropped in the chat. If you're watching back at a later time, if you're watching the recording of this live stream, there will be a link down below in the description to speak with a member of our team. When you click this link, just hit this. So when you hit that link and you want to chat with somebody, even if you are not sure if you want to buy it, I more than welcome you to chat with someone on our team. We have a team of people who support this product that we've built. So if you'd like to speak with somebody, click the CPI Day sale and just ask some questions about the tool. If you want to know, like, what do you guys do with this data, or how do you score this piece? We have a couple people who are trained to help with that topic. So if this would be beneficial to you, click the link in the chat, get a copy of our tool. I'm telling you, if you want to use fundamentals, the cost that this thing, if I had bought this myself, the return on investment would have been 1,000,000% by now. Not actually, I'm just giving you a over ecstatic number. But fundamentals, I'm telling you, the investment in learning fundamentals and building tools for me with fundamentals has been everything. It's been the game changer that I needed. So many traders spend all their time looking at technical charts, and they come to realize after years of doing that, okay, I'm gaslighting myself. Why isn't this working? Why isn't it easy? And it's because, in my opinion, most traders are not going to be successful only using charts. They have to understand why the charts are moving so that they can have a little bit better of an insight as to where they might be going next. Price action can be confusing. It can be deceiving. You can get false breakouts, but fundamentals, I'm not going to say they're not confusing, but they add a light to your trading that I think, is the missing link for many, many people. So yeah, do you guys take monthly payments for it? Send us a message today. We'll give you some information about that. Again, just chat with us and someone from our team can try and help you out with that. But yeah, look at that, guys. Gold is just rocketing. We're at 2404. Really nice push. 2405. It's nice to see gold back in the 24s. It's been a minute. Is this going to take us back to the highs? We'll see. I mean, I think it has a good chance of doing so. But, I don't know the future. So all I'm doing here with my actual positions, like what am I doing with this trade? Am I closing out of my position? No. Am I, taking partials? No. I personally like to trail stops. And so for me, what I would like to see now that we've got this 4-hour chart breakout, if we get a nice closure above this, that's going to probably be a signal for me to go ahead and trail stops further into profits. But I don't want to do so. I don't want to do that preemptively. I'd like to see this candle close. Just show me that we've got enough strength to kind of gain and stay above 2390. If we pull back, that's fine. But I would prefer to get out of the trade if we break this, because then there's something that might have changed. I mean, this candle should continue based on the fundamental data. Doesn't mean it has to. What I'm saying is, in my theory here, if I'm right, this candle should stay strong. It should stay at the top of its body or somewhere near that level. And if it doesn't, I'll just take my profits and walk away. Again, we are floating. My goodness, man. We're just about 65K in open P&L. That is a personal record, and I'm trying to remain as modest as I can. I'm more so than the gains that are on the account right now. I'm feeling vindicated that I stuck to my guns, my idea, my theory with gold, despite a lot of criticism. Because I was wrong for a minute. I was wrong for a while on my gold idea. I was early. I was, it wasn't working for some time. And when you get a bunch of comments or even your own voices in your head saying, like, what are you doing? You're wrong about this. It is a nice feeling to come out of a drawdown or to come out of a losing streak, have stuck to my guns the whole time. My strategy, I've not wavered from my strategy. I've not made any rash decisions. It's vindicating when it turns out all right. So that's what I will say about that. We'll move on from that. Gold, silver. Look at silver. Silver's beautiful right now. Just clean breakout, follow through move. I know everybody talks about gold and silver doesn't get the same kind of love, but silver, did you guys look how close I was to getting stopped out on silver? Within like 0.2% of getting stopped out on my silver trade. SLV is the ticker that I trade. It is a silver ETF. And this is a much smaller trade than my gold one. But to be completely honest, the chart looks cleaner on silver than it does on gold right now, in my opinion. What a beautiful breakout, higher high, and kind of higher low, but another higher high clearly today. Frank sent me a text. Frank is funny. He says the real number was 3.4%. They rounded it down to 3. Frank is funny. Frank has a conspiracy that maybe they clean up the numbers a little bit, if you will. And I don't know. Maybe they do, maybe they don't. But to be honest, neither of us, we're just kind of joking around because who knows? However, it doesn't, I think generally speaking, there's a lot of people looking at this data, a lot of people trying to a lot of people who are, curating this data. Be conspiracy wise, I would say it's a little bit hard to completely fabricate all economic data. Could it be done? Maybe. I don't know. What to do today? I'm sorry, but nothing. For me, maybe if you're more of a momentum trader or like a breakout trader, or you're a scalper, or you're like a short-term day trader, there might be more activity to do. But today is just a day of let winners run, do their thing, and move on. I mentioned it earlier, guys. The Edgefinder, if you want to get more fundamentals into your trading, it is currently 55% off. It is our biggest discount that we're doing. So if you would like to get a copy, we're doing 55% off for CPI Day. Click the link being dropped in the chat to speak with a rep and get a copy. I'm telling you, if you're trying to use fundamentals, I personally don't know of a better tool that will be assisting than the Edgefinder. Obviously, I'm saying that with some bias. We built it, but I genuinely believe that. I don't know of a better, macroeconomics tool that is beginner friendly, right? Even if you're an Edgefinder or a fundamental beginner, the Edgefinder has been built with that in mind, right? Trying to make it something somewhat approachable. Anyways, guys, get 55% off. Use that chat link to message someone on our team about it. We're going to take a quick break. And right after this, we're going to check in with Marco from Marco's trading journey to see what he's thinking on this big day. The dollar index shooting lower, gold moving higher. You just have volatility all over the place here today in the FX and the commodities and indices world. I mean, stuff is moving. Stay tuned. We will be right back after this quick break. Stay right there. Don't go anywhere. Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our Edgefinder summer sale is now live. Get 50% off all of our tools like commitment of traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year. Marco, what's going on, man? Welcome back to the live stream. We got Marco in the building, guys. And the dollar index is no longer in the building. It has left the building. It dropped off a cliff. Marco, what are you looking at today? Are you
yeah, sure.
Open?
I was just laughing at the commercial. At the beach. It's funny.
We're kind of just dummies. We just have fun making those breaks. And honestly, I think they're more enjoyable than just your standard ad. So yeah.
Yeah, it looks cool.
Yeah.
So for today, some very, very big movement on the euro and the US dollar, a big explosion up, which is really good to see. So I'm definitely going to look for buy setups. I'm not in any trades. There was a half decent buy setup here, but I didn't take it in the end because it didn't fit the plan. But right now I'm definitely going to be looking for buy setups, especially if this candle can close with a nice clean close. So with no wick. EJ is just, I don't know what the hell is happening with EJ. I'm guessing this whole move is kind of exhausted because it has been trending up for a really long time. But I did not expect a drop as big as this one. So this is like,
whoa, the yen pairs are insane. Dollar yen's down 1.8. Oh my god.
Yeah, like 268 pips. So that's massive. That is huge. I'm going to look for sell setups, but I'm not really convinced that this can continue with clean price action. And my stop loss is probably going to look tiny. I use 12 pips. Yeah, it's going to look pretty small.
You know what that is, Marco? Just to touch on that, because I'm trying to think about like what's going on with the yen. Why would that be so crazy? Well, I think just a high level note on that is the dollar dropping off makes the yen relatively look like a place for investors, because a lot of people are, they're buying like US bonds, or they're buying like today, clearly US bonds are being bought because the yields for bonds are falling off a cliff. There's a lot of correlation between the 10-year treasury bond and the dollar yen, because again, you have this kind of stake for wanting to buy something stable. The yen may be looking a little bit better today because the dollar is looking pretty weak. But keep going. I didn't mean to cut you off. I was just thinking through that.
Yeah, no worries, no worries. That's interesting. But basically, I can't do much with this. This is absolutely huge. So I'm going to need to see some follow through on this candle. I will put it on the watch list. AU also had a buy setup right here, like a flag. But again, it didn't fully fit the plan, so I did stay out of it. It was basically right here. And now I'm starting to see some really nice momentum. So 100% going to look for buy setups on the Aussie US dollar. If we can close with a clean close, if a huge wick prints here, then that is going to be a massive warning sign. AJ, I took a buy setup, was a small winner, like 1.3%, then got taken out in the morning. Fortunately, got taken out before this huge news scandal, because I would have been probably stopped out for a lot more than I initially risked. Because
some slippage.
yeah, I think I would have been slipped like 20, 30 pips, no problem here. So yeah, good thing I got taken out a little bit higher. Right now, same story as EJ. I'm going to be more patient, and I would like to see some follow through in the next hour. But I am going to put it on the watch list. GU is looking very, very nice, as are all of the dollar pairs, especially with the current formation of this candle with a clean close. It's printing some massive, massive momentum. And yeah, I'm 100% going to be looking for buy setups. Very, very interested in buy setups. Final one on the list is going to be NJ. And yeah, same story basically as all the JPY pairs. So a lot of movement everywhere on all 6 of my currency pairs. The only thing that's not moving today is Bitcoin, I think. Yeah. Bitcoin.
Interesting that Bitcoin's not. Well, yeah, it's kind of interesting. And also, I was just noticing something else, Marco. The indices are actually coming back all the way down. Meanwhile, gold and silver are still, and many currency pairs are at the extremes of their moves. Interesting. Just Bitcoin also kind of retracting a little bit of its gains here. But do you ever take short-term trades on Bitcoin? I can't remember.
Sorry?
Do you ever take like shorter term trades?
No, I don't trade Bitcoin at all. But since it has been pretty active in the last couple of months, I'm following it. So yeah, it's interesting to see that like the risk on assets are not really doing much. I mean, they did push up, but now retraced, as you said, S&P and Bitcoin. So
yeah, they're actually in the red. My goodness, the S&P 500. I mean, that's really interesting to me, the market's reaction to that, Marco, just because this is what the market wanted so badly, was better than expected inflation data. However, maybe people are starting to just be worried that rate cuts are not as great as people might have thought. They might indicate that the economy is really slowing down too. So we'll see.
Yeah. But at least we get some movement, which is always nice. As traders, we just want to see some moves up or down. Doesn't matter.
Yeah, and not to mention, I mean, with the currency world, this is actually some good volatility. That's the thing is, I mean, look at the dollar yen. Oh my goodness, this thing is just completely erasing. How many days back? Let's see how many days of gains. That is 21 days of pretty much bullish price action erased in a single candle. Now, I will say this, Marco, this dollar yen trade, every little downside blip has been bought arguably more aggressively than the NASDAQ. So it is just, I mean, maybe not, but almost like every dip gets bought by this thing. So is this one big dip buying opportunity, or, to your point about watching for closure here on the lower time frames? I mean, if you get a closure here, this is something to watch for on the yen. If you get some closure below support here, I mean, that could very well continue to, 155. We saw how fast, clearly, this thing can move when it wants to.
Oh yeah, JPY is dangerous. It moves like 200 pips in 1 hour, no problem.
Yeah. I feel like I've had many trades where I'm like, things are going really well because I'll be like long, and I'll come back to it and it's just completely erased all of the gains that it's made after holding it for some time. I mean, it is a volatile currency pair. Any other, I was actually looking at the Australian dollar. I am really bummed that I'm not in this trade. I was looking after this kind of push higher. I was looking for a pullback into this level. I was very, very, this was one of the setups on the Edgefinder. So yeah, it's like a very bullish reading on the Edgefinder. So I was like, okay, I'm looking for it. give me that pullback, and just did not give me that. And here it goes today. So I missed that one. But we'll see. Marco, you've been playing around with the Edgefinder, I think, right? Didn't James send you a copy?
Yep.
What are your thoughts? Give it to us.
I think it's very interesting. Like I back tested, I believe 2023.
Yeah.
And yeah, I got some very interesting results. I just need to research how I can fully implement it with my technical analysis as well. My main goal is to be more aggressive with some setups.
Sure.
So I know sometimes I see some setups that don't really fit the plan 100%, but end up being big winners. So technically they do not look the best, but if I implement the fundamentals with it, it may make sense.
Sure.
So an example would be a flag on the Aussie JPY. I think it happened pretty recently. And there was a nice bullish reading on the Edgefinder. I think it was here, yeah. So here on the 18th of June, 2024. I didn't take it because technically it did not have all of the things I wanted to see, but fundamentally it had some things going for it. So if I combine the two, I may have gotten into this buy setup flag and actually made some very good percentage. So that is the main goal. And
I see. Yeah, just kind of as a confluence tool. I love it.
Yeah.
We got Miko joining. What's up, Miko? How you doing, man?
Hello. I had some technical difficulties. I think I was using last week's link, so it wasn't working.
Oh, gotcha. Yeah, no worries. It's all good. It happens. You're here for the big day. Miko, we've got a couple minutes here before our next segment of the show. Maybe we could just give you the floor for a minute. I'd love to just hear what your thoughts are here today. CPI, what are you looking at on the dollar?
Yeah, so I've been looking for some dollar weakness, and I was kind of hoping that today will kind of give us some dollar strength because I wanted to see a bit of a pullback so I can short it. But yeah, dollar absolutely fell off a cliff right now and is looking really, really bearish. In terms of like the dollar crosses, I'm really excited for pound USD because we've seen a huge breakout here. We've been pretty much in a range for the whole year, pretty much since 2024 started. So if this is a breakout, then we could actually see maybe a rally back to 1.31. And if dollar keeps falling and pound keeps its strength up, we could be seeing a lot more upside. So I'm looking for some pullbacks on pound USD. I think dollar CAD looks like it might be breaking out. I think CAD's a bit strong, but if that one could break the floor there, that would be really interesting as well. And same with Aussie dollar. This was looking really strong. It looks like we're getting a really nice, healthy breakout as well. This one's been in range for a while. So pullbacks is the aim for me. Missed out on some gold and silver opportunities. I've been looking for pullbacks for them, but it hasn't quite fit my plan yet. I still think there's a lot more upside to them. Silver's not quite the high yet, so there's still opportunities there. And gold's still got a long way to go back to the high there too, but it's looking absolutely phenomenal. So if we get some pullbacks maybe next week, I'll be 100% looking to get some opportunities, but might miss the boat.
I think path of least resistance, like you're saying, is pullbacks on these things unless something new comes along. But I mean, this was it. I mean, this was in terms of data points that the market was looking for. This was it. CPI plus NFP both coming in cool means a really weak dollar. So I feel like, well, not even I feel like, I think that most likely the dollar index will continue lower. Now, will it have volatility and pullbacks within? It certainly will. Like, there's no question it's going to be having some movements both back and forth. The question is, does this continue? I think most likely yes. But the thing for the dollar index that I see, and I'm curious if we can see this, is the break of 104. Last time we hit 104, last couple times this was really the spot that couldn't quite break. And so now we're coming into that level of resistance, support right away. And we'll see how the dollar reacts. You mentioned the pound also. What I thought was worth mentioning is that this is actually for the year of 2024. That's the high. So we have not seen the pound trade against the dollar at these levels since 2023, as you mentioned. I think 1.30, or even 31, like these levels. That's the high of last summer. So it's been a full year, and we might. I mean, there's an argument here with all this pound strength. I mean, look how convincingly that broke through that level. You might see a kind of bull wave cycle here. And I think what would maybe get us started there would be a break of that 104 level on the dollar. So we'll see. But again, as you mentioned, metals pushing higher. A lot of things are moving higher today. And I guess last thing I want to ask you guys, because I know it's relevant to so many people in the audience right now. Let's give some tips. I know you guys both, we've done this conversation before, but Marco, Miko, if you're someone on the sidelines today, if you are watching these ginormous moves and you either got stopped out or you don't have any positions, I know, so you guys both mentioned you're not totally involved. So maybe this is even easier to answer right now. Like, what do you do? Because you guys have been doing this for a long time. You know, just like I do, that today is not the defining moment of you making it or breaking it. Like, you know that there's going to be more opportunities. But I guess, Marco, what are your thoughts? To somebody who's feeling FOMO, someone who's like, I just missed everything, what do you tell them?
Well, I think you haven't missed much, because trends can last for a really long time, and they can like be in thousands of pips. So it's all about being patient. And let me see how the candle closed right now on EU. Let me just quickly open it up. So on EU, I can see that it's an okay close, nothing to write home about. We got a huge wick in the end, unfortunately. I would have liked a cleaner close, but it is what it is. So I would need to see the next candle continue with the momentum. I would definitely need to see something like that for me to be interested in buy setups, because usually these candles with a huge wick on the top and huge wick on the bottom signal overall indecision and range-bound markets. So for me, it's all about the next candle. If the next candle can continue up with the momentum, close with a clean close, I will 100% look for a buy setup with one of my entry patterns.
Sure.
So, and yeah, for anyone that thinks that they missed out, this is just like a 50 or 60 pip move. That's nothing. I mean, markets can clearly trend for much, much more, right? You can get movements of 200 pips, no problem, in just a couple of weeks.
And that's a good thought process to share with even somebody who is like, oh, I just need to short these moves. Like, you also have to be careful, because this just came out with stellar data in the favor of the bulls. I mean, if you're wondering, why is gold moving so higher? It's got to come back down. Well, it's because all the data just hit it out of the park on that one. So, yeah, I mean, it's what the doctor ordered. Be careful trying to fade these moves. That's my opinion on that. Miko, what do you think? I mean, you've got big moves happening today. If you're feeling left out of the move, feeling some FOMO in the audience, what do you tell them?
Yeah, I mean, I think just look at the bigger picture, because, I've been trading for quite a while. This is not the first big move I've seen. It won't be the last. Even we had one last month. We'll probably have another one next month and the month after that. So if you're looking at the charts and you're already zoomed in, then it kind of looks like you missed out on something big. But we'll see this continuously for the rest of the year, pretty much. And also, I would recommend maybe limiting your chart time as well, not be at the chart so much, because if you're not at the trade and there isn't a trade that's about to be taken, then really you can set alerts and go about your day. You don't need to be looking at the charts, because if you look at the charts for too long, it's going to make you do something that you might regret as well. So maybe limiting the chart time might help with that FOMO as well.
That's a really good way of putting it too, Miko, because if you're not in a trade right now, I mentioned it earlier. I said, what do you do on a day like this? In my opinion, you do absolutely nothing. If you're in the trade, for me, that means letting it run and trying to trail a stop on it. And if you're not in a trade, it's too far to take entries for me. So if I wasn't on a trade in any trades on today, there would be absolutely nothing to do. And if I'm in trades today, there's nothing to do except maybe trail a stop if I find a reason to. So great stuff there, guys. We got our next show coming in behind you. So I want to thank you both for coming on here. Before we kick you out of here, let me just mention to everybody who's watching, Miko and Marco both have YouTube channels. I want to ask everybody, we got 821 people watching between all the different socials. Do us a favor, go follow, support these guys. They come on here voluntarily each week, helping us out with the show to try and make this a better community for traders, bringing real value, no nonsense, no Lambos, no lifestyle, just real trading. So if you're interested in this stuff, smash the thumbs up button, subscribe on this YouTube channel or Twitter, wherever you're watching. But also make sure to go find these guys on their social media. It's Miko Audu on YouTube. You can also find Marco's YouTube channel, Marco's Trading Journey. And yeah, there you go. Guys, thank you very much for coming on the show today.
Thank you.
Thank you. See you next week.
See you guys.
Have a good one.
All right, so we're going to keep it moving, guys. We've got our next guest coming on the show here. We're going to hear from James from EliteTraders.io. I'm sure that we get some interesting things to talk about with the metals moving higher here. Markets are just on fire today. Before we go to this quick break and set that up for James to join us, just a quick mention. Remember, the Edgefinder is 55% off right now for CPI Day. Click the link in the chat right now. If you have not already gotten a copy, this is your chance to get a copy of our tools that we use day in, day out on this live stream. We have traders all around the world using our tools and giving us feedback. And if you're an Edgefinder user, just a heads up, please leave us feedback as often as you possibly can. Our team reviews everything that our members submit to us. You can click this link, leave us feedback, let us know what you think we can improve. We're constantly trying to make it a better tool for aspiring fundamentalists all over the world. We got thousands of people using it. And if you don't have a copy, today is your day to get 55% off. Click the link in the chat. All right, real quick, we'll be right back after this. We're going to take a break and set up for Forex James to be back in a minute. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, and he's here. What's up, James? How's it going, man?
Hey, Nick, I'm good. Thank you. How are you?
Good. Sorry to keep you waiting. We had our show run a little over, but I think it's worth the wait because we've got metals to talk. I know you had a silver position. I also had a silver position. Are you still in that trade?
I am. Yeah, still watching.
Nice.
Yeah, it seems to be doing very well. It's not. Yeah, normally this, I don't watch day-to-day news really. I more take. So, for example, when I'm looking at a position on silver, for example, I'll look at what's the news releases been over the past sort of 6 to 12 months.
Sure.
So watching day-to-day news isn't very interesting. It's not something that I really take into account. But it's hard to ignore today's. There's a huge move on the dollar. Dollar yen, pound yen could be some great entries for the long term. But yeah, silver's doing really well.
Yeah, and you made a good point there about inflation data. I want to show this chart here for a second because to your point, this is actually remarkably important today. I'll show you this on my screen real quick. So check this out. One thing that I think a lot of new fundamentalists, they miss about trying to use fundamentals is they only look at one report. But as you've just mentioned, looking back a little bit further, what made this CPI report just resoundingly strong for dollar bearishness and for metals and for the markets in general is that this constitutes the third in a row inflation on the CPI level report that actually looks good. This is showing, and many fundamentalists on Wall Street, they will talk frequently about the 3-month trend of data, right? Because if you look at one, it can blip back and forth. But if you look at kind of the rolling moving average of economic data, it can oftentimes tell a very important story. What we see here is arguably a trend in the direction of the 2% target that the Federal Reserve Chair Jerome Powell keeps mentioning that they need to see in order to get rate cuts. Rate cuts means dollar bearishness. It means metals go higher. It means stocks can do okay, so long as the economic data also hangs in there. And so we've got an interesting story here today. I mean, metals just moving high today off of what I would say is a confirmation for many of those big money managers who says, well, there's your 3-month trend. We've got inflation cooling. And it's certainly progress. Now, as you mentioned, gold and silver, we've been having this discussion as a theme today on the show is like, what do you do on a day like today? And I want to ask you the same question. I mean, you've got some positions that are working well for you right now. What are you doing today?
Well, I'm actually, I saw your segment just before I came on. You were saying, be careful, guys, don't fade news. Yep. I'm doing exactly that. So I'm fading the euro dollar.
Okay.
and I don't want to share it on stream just because I really don't want people to copy it because it's very high risk.
No
I've
problem.
allocated very specific risk model to it.
Mhm.
But yeah, so I am doing that, but again, it's very, very monitored and very managed.
Well, I would say that if I was to go against a currency on a secular basis, it might be the euro. So I can
Yeah.
understand why, if you think that it's coming into a level, I'm not saying that you can never counter trend trade, because I kind of am very against like any sort of saying you can't do this and never make money. Like I think anybody can make money. It's not my call as to whether or not it can work or not. However, to
Yeah.
your point, it is a high risk trade to try and go against a big data like this, simply because the average true range of days like this is going to be very high.
Yeah, exactly. It's one of those trades where as soon as it's news is sort of corrected, which is one of the things I'm looking for, it'll be a case of closing it immediately. So there was no signal. I didn't announce this anywhere because again, I don't want anyone to follow it because it's very managed in a very strict way that I don't think I could sort of explain or very easily, especially over like YouTube or Twitter.
Sure.
But yeah, anyway, so apart from that, we're currently in a euro pound short. This was quite textbook, really. We had a gap filled here. Pound is doing very well, of course, due to the political stability coming into the economy. The euro, not too great at the minute, in my opinion. So yeah, it's kind of a simple trade. But yeah, we'll see how that goes. That was also helped by the US news.
Yeah, no, and that's the thing is dollar pairs across the board are well, the dollar is just weak against everything today. I mean, I've got dollar yen pulled up. I mean, oh my gosh, James, have you seen this dollar yen move? Like, what in the world? That's crazy.
Yeah, no, I know it's huge. It's actually
And I
at a
don't think
really
that's
nice day as well.
intervention, right? That's just straight up reaction to the 8:30 report of CPI. Usually we see moves like this. Bank of Japan, it's like, oh, they're intervening, and then it's blipped back the next hour. This has the potential of actually being a maybe a reversal on the yen in the short term.
Yeah, I think it will potentially. I think we've now seen quite a lot of liquidation in the markets. And I don't mean liquidity grabs, guys. I'm not talking about that. I just mean in general, people have been taking profits. And yes, stop losses will have been hit. But I also think this is going to present an opportunity for a lot more people to get into the markets, because this is a healthy pullback, in my opinion. This isn't, I mean, it's an aggressive move, don't get me wrong, but it's not enough to then say, the trend's changing or something's actually changed in the markets. It's obviously just that news reaction. And technically it is at quite a nice level. So yeah, it wouldn't surprise me if we did start seeing people entering, not necessarily like retail, but I mean more larger participants large entering this market, and we start seeing a continuation higher.
I gotta say that when it comes to charts like this, James, in my personal career, I'm just kind of a very diligent like trend follower, and I will say that these sorts of moments, as much as I get excited about the idea of like, hey, are we actually going to see a reversal here? When it comes to my actions, I won't be shorting this, because at the end of the day, the money that I've made in the markets over the years has been going with the winner, going with the trend, going with what's working, and not abandoning it until it really shows proof of reversal. So for me, it's like with the dollar yen, as you just mentioned, this is a huge level. This thing has been in a roaring upward trend. Do I think that will go on forever? No, but I think that I would always look at this with the benefit of the doubt first, because it's in an uptrend, right? And then it's like, well, if you get failure here, then okay, trend following means being late to the party, really. And late to the party means waiting for a new trend to start to form before you get bearish. That would be my take on it too.
No, I totally agree. And normally I wouldn't, normally I would be looking for very similar things. So sort of a clear trend change. However, with the yen, in my opinion, at the moment, there's still no reason for it to be bearish. I think whatever the dollar has in terms of problems, the yen is outweighing that. So for example, even if we did start seeing lower lows and lower highs, it would still be a bullish market in my book, especially in terms of economics.
You want to see a gross chart for that, James, based on what you just said?
Yeah, sure.
Look at this gross. This is Japan's GDP growth. Okay. So what we're looking at here is just an ugly, ugly chart. And to contrast that with the US data for a second, I mean, come on. There's the US economy, well above the twos for some time. Even this year, with all the interest rate hikes that we've seen, we're still putting up positive growth in the US. As you know, the US growth is just a hard story to beat. I mean, globally, it is pretty dominant, especially when you take a look at the yen. I mean, the yen is putting up since 2023, been putting up mostly negative GDP growth. You can contribute that to many different things. You could say, well, their population decline. You could say, well, the U.S. just has immigration, which boosts their GDP. So, I mean, there's so many different levels to this. But at the end of the day, it's like you just pointed out accurately that I would agree with. Whatever yen problem or whatever dollar problems come up, the yen has them beat in those problems. So, as in has worse problems. So, we'll see. But just kind of an interesting one as you see this big pullback today on the USD JPY and other yen crosses as well. You mentioned, well, were you looking at any other yen crosses like euro?
I was
yen,
in,
maybe?
I was in pound yen. I got
Okay.
stopped out at break even, unfortunately. But
Okay.
that was moving quite nicely. It was somewhere along these lines. But yeah, I was, like I said, stopped at break even. But it's so I would still be happy again to go in long on the pound yen. So looking at daily levels, I'm not sure if any of your viewers use pivot points or if you do, Nick, but pivot points are quite good at sort of determining potential reversal levels. I'm not saying that you would use them now to try and time news or anything, but just observing them today, we've broken past S3. So we have statistically a 90% chance that we close back above S3 before the market close, or for the market close, I should say. So if you are, well, sorry, I probably shouldn't say that, but yeah, I think in general on all the yen pairs, I'm still bullish. I don't think there's a single currency that I would start shorting against, especially not yet.
Yeah, that's fair. And I'm just looking at just different yen baskets you could do. Of course, you could do like JXY here. This is the Japanese currency index against everything. You can see the yen is getting some strength here today, but I don't necessarily, I think if I was to go against the Japanese yen, I personally would prefer to do it on something other than the dollar. Maybe the Australian dollar, like Aussie yen. I kind of like that cross. I think I could see that being a setup. USD JPY probably, I mean, if you're betting on yen weakness or strength, the UJ is the most liquid and it is perfectly fine. But I think you might be able to get some extra squeeze, in my opinion, on the Australian dollar against Japanese yen. So I might take that trade, but I don't usually trade non-USD crosses on the FX side, but I kind of been like bearish on the dollar and bearish on the yen. So maybe I'll trade something different. So I don't know.
Yeah,
we'll have to see.
Yeah, no, definitely. So yeah, I think overall my bias hasn't changed. I'm still bearish on the dollar. Hold on, let me pull up the chart. Yeah. So yeah, we did get the break of the trend line that we spoke about on Monday, Tuesday. So yeah, I think overall still bearish. No reason for me to go long. Just waiting for some sort of correction of this move that I think will likely happen, and then I would start scouting for some potential swing trades on dollar pairs.
Yeah, no, I mean, that trend line that you drew ended up being a theme of this week. Really, I've talked about it a bunch of times because when you mentioned that, I was like, yeah, you know what, that's a huge level. We respected it recently. Let's see if CPI on Thursday can get us there, and clearly it has. But that next level, I think that's in focus is where it currently sits at 104.2. Can we break the 104 level? That is a huge milestone, I think, for dollar bearishness. If we can see a break underneath that and close underneath it, just simply because we've struggled to get below that level since March of this year. So, we've had this persistent dollar strength at this level. So you are really, even if you're a bear, I think this is where you acknowledge, well, this is a stronghold for the bulls. Let's be careful here. Let's see what happens. If we can break underneath it, My opinion on that would be dollar weakness can continue even, but we may see a bounce in the meantime. So we'll see. I've made this point several times today already, but I think it's more of a day where if you're in positions that have moved a lot, you're just managing trades. And if you're not in trades, you have to be very careful on days like this.
Yeah, absolutely. I think, it's very easy to get chopped up. People can remove stops just to allow for news to do what it does, and then they get liquidated. There's lots of different ways that people can mess up during news. So it's best to either not trade, so don't place trades before news, or put stops to break even, or accept the risk of news. But yeah, I think dangerous day.
Yeah, absolutely. And last question for you, James, is the indices. If you take a look at like USDJP, I'm sorry, not USDJP, but S&P 500 or NASDAQ or Dow Jones, they all three made a push higher and then dropped. Kind of interestingly, my guess on this is just that, we're at an all-time high already. The market has been so bullish. It bought prior to CPI, like it's run up into CPI. It was either going to drop on CPI or have mild upside from here because of how incredibly bullish these things have been. I mean, this, James, somebody I read on socials yesterday was pointing out that this trajectory is like the same trajectory that we saw in the COVID rebound, which was just money printing city. We saw like this trajectory. It's the same trajectory that we're seeing right now, which is kind of scary because we know how the COVID bounce back ended. It ended with a year-long bear market in 2022. So you got to be careful.
Yeah, absolutely. Yeah, we'll see. I mean, I don't know. I'm not here to try and time those bear markets, but yeah,
I'm certainly not either. But it is crazy how just when I see these moves, James, my thought is like, okay, I know there's going to be some heavy selling, but I absolutely do not know when that's going to be.
Yeah, well, that's the thing, isn't it? That's going back to trying to time the markets. I think it's too high to buy unless you've got large capital to try and allocate to this and sort of buy your way in and accept some drawdown. But for the sort of the average retail, including me, it's not ideal to start looking to buy here. So if we do start seeing bearish moves, then fine, so be it. There's no loss there. It's just a change of the trend. And if the signs are there, for example, we start getting bearish weekly candles, daily candles, then potentially we could start looking to go short. But yeah, at the moment, it's still a bullish trend. So any sort of pullbacks would still be buys, in my opinion.
Yeah. No, it's I'm kind of in the same camp. I mean, with today's number 2, you have a good argument, I would say, for a better probability of a soft landing, because what would have been terrifying for the markets today, like the stock market, would have been inflation staying flat or reversing course. Would have been absolutely awful if you have jobs data cooling, the inflation's not going anywhere, and the consumer is clearly showing signs of slowdown. If you had combined that picture today, I think we'd have a very different look in the stock market today. You'd have a big sell-off. Could have been UJ part 2. But the thing here is that you've got a story where you can kind of see the light at the end of the tunnel, where you say, oh, look, inflation's coming down. Yeah, the jobs data is coming down. But as long as inflation is cooling, the Fed has the green light to cut interest rates, which in theory, which is just theory, it could lead to a rebound in the consumer, and interest rates coming down could lead to home purchases coming back, and it could be a good thing. So you can kind of see the case for a soft landing, but maybe that's also why we should be very scared, because it's almost so clear now.
Yeah, no, exactly. When things become clear, they start getting priced in. And again, the average trader, retail traders, are the last people to really put those pieces together.
Yes.
And then it's too late. So,
yes, exactly.
Yeah, we've got to keep our eyes out and be. For anyone watching, this is why it's important to have the economics or just a basic understanding of how things work, rather than just having technical analysis, because you can get a picture of what's going to happen before it can happen, and then you can start planning ahead, and that way you're not sat there on Monday morning with a fresh chart trying to do your technical analysis and trying to get into the markets. because you would have this preconceived idea, if you have all this data that you've already collected and researched. But
Sure.
yeah, I mean, we'll see. I'm not too interested in the indices at the moment. Like I said, they're just too high to buy, and until we see some sort of interesting moves, then I'm sat on the sidelines, really.
No, I think that's a good point, and that's again keeps coming back to the theme of the day. I asked this question to the last guests, and I'd love to ask it to yourself as well, James. So obviously, there are going to be many people. Well, actually, let me back up and say, many times in my own trading career and in yours, I'm sure too, James, there have been days like this where things move explosively. So many people are looking at gold and they're like, how have I dropped the ball so bad? I haven't caught on any of this bullishness. Everybody seems to be making money but me. First of all, social media, I'll just say this, social media is a liar. People are not all making money today. It just feels like that because people who are making money are the loudest about it. So I just
Absolutely.
want to say for people who are listening, what would you say to them, James? I mean, if you're feeling FOMO, if you're looking at all these charts moving like crazy, what does your, experience tell you to do on days like this?
Well, there's two sides of the coin. You've got, if you're on Instagram or Twitter and you're looking at these people that are showing profits, you've got no idea what's going on behind the scenes. They could have two accounts where they go long one account, short the other account. They could Photoshop, there's all sorts of things to make themselves look better than they are. I'm not trying to take credit away. Some people, will have made money. And then there's the other side of, if you're not that type of person on social media, you can take this for an example. This is silver. I tweeted this out on the 13th of June. So that's a month ago. So I was sat watching this trade for probably 2 weeks.
About it at that time too. Yeah.
Yep. And now it's only just reaching 1% profit. And although, I could print screen the profits and make it look all fancy, it's not fancy. I've been sat in this trade for a while, sat through the drawdown. And that's trading, that's the reality. So
no, I love that, James. And I've shared a similar kind of mantra on gold. I have this gold position that right now looks just like a monster. I mean, it is a monster trade, but what is the under the surface that I try and bring to light with it too is I have been bullish all year pretty much on gold. So I had great trades during this time. I had great trades during this time. I had some good trades here, but here, a lot of waiting, stop outs, false starts. Oh my gosh, I'm wrong again. Losing streaks. So I've been right in the general direction, but as you're saying, I think that's a really, really good and honest point to make is I've been in this gold trade. You've been in your silver trade for weeks and you're seeing someone's final results of maybe, also I think it's important. Like if I'm going to talk about, my gold trade here, that I mentioned that I took several losses, lost thousands of dollars trying to catch the right trade. So it's important.
I was probably one of the only traders that didn't make money on this gold trade, on the gold run actually. So I missed the initial move up that you took. I think it was one of your first ones. I missed that, and then in the choppy range that we've sort of in now on gold, completely got chopped up on there. I lost not loads. It was only 1 or 2%, but I'm not ashamed to admit that because that's part of the game. You're not going to get everything, even if it's clear. I was still buying the market. But, if I was looking at this in, at the time and I was buying this pullback here, stops, I don't know, here, for example, I mean, this wouldn't have actually been a stop out, but you get what I'm saying. The chop, I was still trying to buy the uptrend, but still lost money on it.
No, same. I got caught on that pullback a little bit. I stayed a little too long. I mean, the thing is, I think, for yourself and for anybody in the audience who maybe we have some fellow trading influencers out there, I've been making this push, this campaign, if you will, for some time. Show your losers, show your broker statements, do all that good stuff, because you know what? It's a superpower. When you show real results and real transparency, I mean, I think it leads to people finding comfort in watching you. And, it also, to be completely honest and selfish about it, is like, I feel so much more at peace doing this every day, just telling everyone when I lost, tell everyone, it's like a weight off your shoulders where you don't have to fake being this this, perfect human being that never loses trades. I mean, that's just not realistic. So I think people appreciate it. It's more comfortable to live in that than trying to, it's like living a lie. If you're just like, I only win and I'm here's my profits every day, and it's just not realistic. So good stuff. But James, thanks for joining us here today. I want to thank you for coming on, helping us out with the show. As always, you've been awesome. People love your segments. So everybody in the chat, do us a quick favor, type thanks, James, for coming on here. And as we say goodbye, we're going to drop the link to your website here. We'll do elitetraders.io for anybody who would like to check out more information with you, who'd like to trade alongside you. So guys, make sure, go check it out. You can also find James on social media as well. And James, man, thank you for coming on the show today.
Yeah, thank you for having me, Nick. Have a great weekend. I'll talk to you soon.
All right, you too. All right, guys, we're pushing on. Next up. Well, we don't have any guests for a little bit. We got a little bit of a break here just to take a look at some charts and discuss things. Yeah, great. I mean, can we just get a round of applause for a second? Our guests have been phenomenal today. I got to say, behind the scenes of this show, there are two producers, James and Chandler, who put together, not that James, but a different James. Our James puts together show guests. We plan these streams together, and they do a remarkable job. I get to, at this point, pretty much just, I'm just part of the rotation too. I come on the show, I hang out, and they are professionals at what they do. They make the show look so good. I mean, look at these color schemes and everything. Just a round of applause for the producers, as well as for all of our wonderful guests that make up the show. Sometimes people say stuff on the social media. I mean, they say stuff all the time, but sometimes people will say, Nick, we most people love the guests. But sometimes people are like, oh, don't have guests on. We will never, as long as this show keeps going, I think we're always going to have guests on, because trading and what we are doing on this show, we've changed it from just Trader Nick live streams to the A1 Trading Show, so that we can bring comparing thoughts, different perspectives, different traders from different parts of the world who trade different things. Diversity in trading is really, really important. If you live in an echo chamber, that's not healthy. If you live in a space where you only ever hear the bear case for gold, the bull case for gold, or the bear case for the dollar, if you're in a perma bear or perma bull, or only one thought process vacuum, that's dangerous. But having different people with different thoughts and contributing ideas makes this show, I think, one of the most unique ones on YouTube. Having guests keep the show fresh and interesting. I agree. Because, here's the other thing, Lee, is that I have my takes, right? But I repeat them pretty frequently because my trading theory doesn't change that much day to day. So having other people come on the show, I think, is a game changer for not just for the content, but for genuinely the dialogue and education for everyone, myself included. I learn a lot from our guests. So yeah, remarkable. We love our guests. It is it's also the stream viewership, by the way, has skyrocketed since we started adding guests. People clearly love it, and that's just awesome. I'm glad I'm not the only one. All right, so let's keep going. Silver's up 2% here. It was up at one point a little bit more than this, pulling back slightly. Here's your 1 hour chart. Gold is up 1.5% and just pushing higher. TLT is going, all of my trades are going well today. How rare is that? USD CHF, I do need to trail a stop. I just drew this in, but I'm going to trail this stop really quick. And I'm going to share this update with members, guys. Sorry, guys, I've got to really quick. We're going to be trailing a stop loss here. I've got to trail stops on this USD CHF trade. So inside of our, well, actually, while I'm doing this, if you guys would like to join the Discord, we'll drop the link here in the chat for you. So you guys can join the link if you have not already. Give me a second. Sorry, guys. I'm multitasking to the max. All right. Okay, so I'm going to trail my stop on USD CHF. I'd like to just lock it in just behind this previous high around 90.05. So I'm going to do this. Okay. 90.05 is, sorry, 90.05 is the entry, and I'm going to move stops just slightly into profit here. 90.03. We did put in a bit of a lower high here. 90.03. Trailing stops slightly into profit behind this lower high, following today's push lower, lower low. All right. I'm just going to take a picture here. So I do share all of the trades that I'm taking inside of our Discord channel. If you are not in there, we dropped it a moment ago for you. So you can join if you'd like. The full signals are not a free thing, but within the group, we do offer some free analysis day in, day out from myself and Frank. So if you would like that, all right, that is good to go. Okay, for those of you who are members with us, we just shared the updated move on USD CHF, which is pushing lower today off of a really cool CPI print. Really good. Chris Pulver just sent me a message in regards to yields dropping today. And yes, indeed they are. My goodness, really big drop on yields. It's probably the same reason the dollar yen has dropped off a cliff. Dollar is looking less attractive on the global stage. TLT's looking hot today. Look at that. This is long duration bonds. Looking really strong today.
Hi, Nick.
Ivan, hello.
Surprise!
You've arrived. Hello. Trick or treat. How's it going, man?
You need glasses. Chat.
I need
Please.
a clone of myself. That's what I really need, Ivan.
Nick, we shouted at you. Look at dollar yen. It is falling. It is falling. Look,
Hey,
it's dropping.
Better late than never. I made it to dollar yen. Don't worry. Yeah, it is dropping like crazy. Look at that. Ivan, explain it to us. Where's dollar yen going?
Or this is what I've been hoping for like 2 months or half a year or something. I don't know. Something for a very long time. I don't know if it's going to be, well, we'll see in a couple of days if it was back at Japan or Minister of Health, Minister of Finance or anything like that. But it dropped about, was it 350 pips or so or more?
Yeah, that's a crazy drop. At one point, 417.
Yeah, it's dropped more than since I spammed you. But yeah.
Ivan, you know how hard it is to juggle. It's you're trying to read chat while also coordinating.
Chat, it was 10 minutes.
Well, if you had done it for 11, then I would have seen it. I did see it eventually. Yeah, dollar yen. I mean, the question is, Ivan, is support going to break? Because if you get this closing like that, whew, we might see more downside on UJ for the first time in a millennia.
Yeah, Also, what can I say? Also, the more the merrier at this point. I just want any support to break because that will make me have a even better price to buy from.
Yeah.
So I see this as a buying opportunity. I see this as fantastic. This is what I've been waiting for my entire life, and probably a bit more on that. So currently it's highly volatile at the moment. So there's nothing I could do at the moment. But give it a couple of days and you'll see what happens.
Yeah, I was going to ask.
And
So
then
you're not buying it today, huh?
no.
Okay.
Catching a falling knife, Nick. I need 500 pip stop loss for that.
Fair enough. Fair enough. So what's the game plan on the yen pairs?
Buy the dip.
Okay.
So very long answer, short. Looking for new higher high and higher low. So somewhere in that direction. It's probably gonna take a couple of trading days to do it. It can also just shoot back straight up and then leave me in the dust. But yeah, I'm excited.
Yeah, it's nice to at least see a pullback finally on this thing. I mean, this thing has been, I was talking about earlier, it's almost like a month-long retrace, or a month of upward trend was erased in just one day of pullback. And this seems to be, some people were wondering, is this yen intervention? But I don't think, I think it's just the CPI, right?
It's beyond CPI, because if you look at, I don't know, I haven't done that. I didn't do that before I did, but if you give me 2 seconds, I can add everything together. Because if you look at the other pairs, I'm just going to do that very quick. They didn't move half the pips. So Euro has moved.
Okay, yeah, that's a good way of checking it.
Like, it's 50 pips. Aussie has almost back down to zero now. It was 43. Pound was about 70. There's a dollar Swissy that you had up. Did you trade dollar Swissy?
I'm short on it.
Okay, and then that one moves 55. And dollar yen has moved. What did you say? 200, 300, 400,
like 415.
Yeah.
Yeah.
Do you want to talk about this trade that we took at some point? I don't know when did you take it? I didn't see that, by the way. That's really
USD CHF. I've been in it since July 4th or 3rd, 5th.
Third,
right here.
Before me?
Yeah. So I've been holding on to it for a minute, but I just trailed my stop loss with this lower high here. I was waiting on a lower low before I could trail stop, so I got that. And we'll see where it goes. I like dollar weakness right now. We'll see if it can follow through. But the big thing for me, Ivan, is this 104 level. We've seen this attempt before, so I'm cautious here with the dollar. The DXY at 104 seems to find support pretty strongly. The question is, can we get the actual break below that? I think if you see the break, you've got something really going. But what are your thoughts on the dollar index?
Yeah, I'm just going to switch screen. Also, to me, range as expected. We are back down to the bottom. If we break, which we not have been able to, I don't think we will break it. I think other currencies are going to drive the strength, and then dollar will do whatever it wants to do. Because I think if we were to pass through 104, it had to be a new rate cut in July.
Okay. Yeah, that's a good point of view. Like, to get dollar to break 104, it needs more rate cuts sooner. Because now, I think, in fact, we should check this, but I believe it is probably very likely that we now see expectations for a rate cut in September. They already were forecasted, but there it is. An 83% chance, a 90% chance that we get our first rate cut by the September 18th meeting. That is the highest I've seen it personally since, well, the last few months. So seems like, and then if we go take a look at December here, the December meeting, December 18th, there is almost a 100% chance that we see our first rate cut by then.
Or even two. But
or even two.
But yeah, no, this for me. I haven't given my 2 cents, I guess, today, but my 2 cents is this puts the nail in the coffin for any rate hikes and secures the position of a rate cut. The only question is when. I don't know, but also this is very funny by Powell. I think this is by design, by force. Going into his conspiracy theories that he had earlier today. And he spoke before CPI and not after, so he doesn't need to comment about it.
Yeah, that's a good point. There's a conspiracy. Did he know something about CPI beforehand? He did sound very optimistic in his last few congressional hearings or his Capitol Hill moments. So I don't know, but we'll see. I mean, clearly markets are reacting. You've got the Russell 2000 up 2% today, while the other indices are pretty flat. So, clearly this is the rate cut sensitive one. The Russell is flying high off of this data. You got gold and silver moving higher. Oil is dropping. Yields are dropping aggressively, which, to your point, nail in the coffin about rate hikes, but even nail in the coffin, I would say, for rate cuts this year. I mean, now it is, as we just saw, at least from Fed futures, Fed funds futures, the expectation is 1 to 2 rate cuts by December. So we'll see. But this has been just kind of a all-encompassing round of data for the rate cut story. We talked about this a few weeks ago, Ivan. You and I were both like, maybe July, but actually, what is the probabilities for July? We didn't check that. Let's see.
It was,
okay, so not likely, but the probabilities for September have greatly increased. So we'll see. But as you mentioned, where does that take us with the other central banks? Can you give us, Ivan, an idea on, we're talking so specifically about the U.S. Situation today, but globally, we saw something interesting out of the RBNZ. We saw the New Zealand Central Bank have a bit of a dovish tone recently, and we also see, kind of a global stage that looks interesting too. What are other central banks thinking?
I can't tell you what they're thinking. I can say what they're doing. Words, actions speak louder than words. Bank of England was supposed to have a rate cut, and then Rishi Sunak, the former prime minister, released an election, 4th of July, and then that day they cut all meetings from the central bank. Nothing else was going to happen until that election happened. Landslide happened. Labour won, and so I think a rate cut in Bank of England is about to happen. I can't remember the probabilities, but it should be in the next meeting or the meeting after. They are definitely in the books. Australia, I don't know if you mentioned that, but Australia is far away from anything at the moment. Well, they have had CPI coming lower, but they still have a crisis, and they still, it's not there yet. For New Zealand, is still the CPI hanging in a thread at 4%. That data is going to come out 17th, I think 16th of July for Americans, 17th local. That's a lot is hanging on that, because everything else, it has slowed down. GDP, unemployment has risen. Everything is poor performance, so it's just back to CPI. And then for Canada, probably, I can't remember exactly top of my head, but there probably going to be another rate cut from them this year. ECB is maybe this year, and then what is the last one in my head? Japan might hike in July, 31st of July, but that's just rumors and whatever.
Yeah, it's just interesting to see kind of the global stage, not just the Fed, because it really does impact the story for the dollar. Is, well, what are the other central banks going to do as well? Are they going to rate cut faster? Are they going to be slower? So I remember several months ago, the thought was the Fed was going to be one of the first to cut, and then it completely swung the other way, and then the Fed was expected to cut last, and now, as we see the dollar trading in a sideways range, it's clear that the market is trying to figure out the speed at which rate cuts will happen globally. So will be very interesting to continue to monitor that story. Ivan, what else are you looking at? You have any other trades open?
So I had I think I posted it as well. I think it was a good boy this time as well. I posted a CAD CHF at the same time as the dollar CHF trade. So I sold this one because of weak Canadian performance. Maybe a rate cut later. Seasonality strength on Swissy. Swiss is like, well, they had a rate cut, but then their CPI came back up to like 1.5 or a bit more normal. So that's kind of the two trades that I have: dollar Swissy and CAD Swissy. And did it hit my target? I need to double check that because okay, it's all around the area. So I'm expecting to hold this one either until tomorrow or until mid-August on CAD Swissy.
Okay, fair enough.
See how far we go.
Yeah, the Swiss franc pair's kind of an interesting one for me. I mean, I like the prospect of basically the dollar against most currencies, but I like the Swiss franc. I like the setup on it. I thought the chart looked really clean, and we'll see where that goes. I think the dollar Swiss has room to maybe make a push back down to this low of mid-June, back in June 19th, 88.26 or so. But we'll have to see where that takes us next. The other one that I was watching was the Australian dollar, as you mentioned, maybe one of the slower moving ones to talk about rate cuts. I like that story, but I have not been able to get a pullback on this one. I've wanted to. I've been. It's one of those classic cases of right in the direction, but not able to get the entry. So I've been watching the Australian dollar as well. You mentioned it as well. Do you have any maybe Aussie yen or any pairs that you're watching there?
When stuff has hit, I think it is weekly target, monthly target, all the targets of this world. So I literally are just going back to what has happened before. So I feel like we are here at the moment, and we can probably have another dip, and then like this situation is kind of where I will be again, or pull back again. So this is like technically where I would be looking, because I need the high. I need the high, and then I need to be broken again. So it takes a couple of days. This is 4 hours, by the way. So it takes a couple of days for it to happen. But this is so much welcome. This is so great. This is like, I don't know who is the most enthusiastic person I know at the moment, but like I'm super dope. Like this is like the rebirth of yen pairs for me, because monetary policy hasn't changed. Nothing has changed other than Ross. Yes, I think there's invention, or they did something. They're never going to confirm it. I don't really care. I just need the price lower. Whatever happened. I just need the price lower, and I got it. So
sure. You sound like me with indices, Ivan. A pullback in the yen for you, or the yen crosses, is like a pullback for me in the indices, because I love them, and recently they feel so rare. Not always, but recently yen pairs and indices have really seen just one directional pushes. But I love a good dip, and I think we'll have to keep up with you to see what you end up doing and when you do it. So yen pairs definitely on the watch list for sure.
100%. And then New Zealand weakness coming in, because if you have that CPI coming in, okay, the weakness will be there before the CPI, but that will probably continue, and pushing it even lower. And there's a seasonality from now around this weekend until mid-September, mid-August on New Zealand weakness. So if you get another confirmation on that, does not include the New Zealand yen, by the way. And maybe not New Zealand dollar, but all the other crosses. So until mid-August is kind of like my theory. So for me, it's go time. It's showtime.
Yeah. Well, it's definitely exciting when you actually have setups forming. It's like when you get pullbacks, it's like, okay, I can actually do something, but it's really difficult when everything is trending one way. And that's I think right there, in terms of a psychology standpoint for trading, is so important. When everything is just trending off in a direction without you, or you're just on the sidelines waiting, that is, to me, one of the most dangerous times for trading, because it's so easy to like get bored, get frustrated waiting, and make bad decisions. So psychologically, I'd say that's probably one of the most, for me personally, one of the things I struggle with the most. I don't act on them maybe like as much as I did when I was a beginner per se, but it's still a temptation to this day. Like when I have no trades on and all the things that I wanted to get in are moving without me, it's tricky. So I've asked this to everybody today, Ivan. So I want to follow up with your take on this question, because you're a trading coach. So this is especially helpful to hear from you on this topic. If you're somebody in the audience who is seeing all these remarkably strong moves, the dollar dropping off a cliff, gold rocketing to fresh highs again, the Russell pushing higher, yields dropping. I mean, everything is moving so hard today. If you're somebody in the audience feeling a lot of FOMO right now, what would you say to those people? Like, what do you do on a day like today? I know I've asked you this question 20 times, but somebody is new to this stuff and they're listening to your answer. So what do you think?
If you didn't plan for it, you can't trade it. Well, your broker will allow you, but you shouldn't. So the move today is a micro. So if you take NFP generally speaking has like a 50 to 100 pip move, but then the aftermath is 300 pips.
That's a good point.
Like, this is just the beginning. Because if we're going to start cutting rates in America, if you're going to start cutting whatever, or start increasing in Japan or whatever, we are to start with the beginning, because the moves today is just to show you the direction, right? And then you can come back and do whatever, but you have to just look at the price. Like, it has pulled back many times. Even though we have a direction, there have been so many opportunities on lower time frames or higher time frames that it doesn't really. So let's say you had a bullish direction here for that matter. Like, how many times did you not have a buying opportunity after that making a new higher high? So for me, that's my data.
Yeah. No, that's such a good answer, Ivan, because James, who was on before you from Elite Traders, he was mentioning something similar. He's like, if you really, actually, no, it was Marco. I'm sorry, I'm getting mixed up. We've had a lot of guests today. Marco mentioned that with really strong trends, they can continue so much more than people think that they can. So to your point as well, when you get these big moves, if the fundamentals really are changing, it's as you've said, if the US is really going to cut interest rates, if the Bank of Japan is really going to see some different environment ahead of it, the moves are only beginning, and there will be big days in the future. There'll be big swings in the future. So don't get too hung up on the short term. Don't kick yourself today. It's a Thursday. It's almost the weekend. Relax, take a breather, do some back testing this weekend. That would be my tip to people who feel frustrated, because I'll share just a personal anecdote for me this year, Ivan, has been the NASDAQ. I mean, I finally got my entry on this, and I'm still in technology long positions. But I will say to anybody who feels like, I'm so frustrated right now and it's painful to even listen to this stuff right now, I know how that feels. I've been there this year. I've done this for years. Ivan, you've done it for years. We're still human beings. We still have feelings. So this rally in the NASDAQ, I missed all of this move, and I was so annoyed by it, because I was like, I've been right about this theory. I caught the rebound in 2023, but then I missed the really sweet melt up that we've seen this year, a lot of it. And I finally got my entry on the pullback. But the point is, be patient, stick to your rules, stick to your strategy, don't do dumb stuff, and things will turn out okay in the long term. So Ivan, thanks for your coaching tips. And speaking of coaching, if you guys would like to work with Ivan on a one-on-one basis, that is something that he offers. He's best in class for that sort of thing. If you have something specifically that you're struggling with, I've heard from people who have worked with Ivan, so I'll give him a testimonial on behalf of others that I've heard. He listens to what you have, what you're struggling with, and he works through it with you. And sometimes that is what many traders need to unlock something that they're really kind of hung up on in their trading. So if you guys would like to get some information from Ivan for one-on-one coaching, if that's something you're interested in, you got to pay for his time, but it is well worth it, and the prices are very fair. So if you'd like some information on that, we're going to drop a link here in the chat to Ivan's YouTube channel. Hit him up. Even if you're not interested in coaching, just make sure to go subscribe to him on YouTube. But if you are interested, reach out to him on social media. I'm sure that he would be happy to speak with you. Ivan, my hero, man, thanks for coming on the show today and talking yen pairs because I missed it for 10 minutes. So you came in and you took over the stream so we could talk yen pairs. I love it.
Can I just say one thing?
No, I'm just kidding. You can.
Because tomorrow I have cleared my schedule, so there's free 30 minutes calls the
Perfect.
entire day.
Yeah.
I don't know where Chandler put the link, but tomorrow I'm available for free for 30 minutes only to talk about those people who has issues. I'll try to do my best. And they're pretty, they fill up very fast. So
even better. So guys, if you would like access to that, best way to do it is just to find Ivan on his social media, send him a DM and ask about it. And I'm sure that he would set you up with that. But highly recommend you guys take 30 minutes, spend it with Ivan. And how can you beat free? That's a great price. So Ivan, thanks for coming on the show. And we'll see you next time, man.
Thank you for having me.
Yep. See ya. Gotta love Ivan, man. Ivan's one of our longest term contributors to the A1 Trading Show. We've been doing shows together for, at this point, legitimately years. It's been awesome to have his thoughts, and I know a lot of people really enjoy his commentary. I certainly do not, but it's nice to have him on anyways. I'm just kidding. We love Ivan. Anyways, guys, we've got Chris Pulver coming next. You guys know him and love him as well. He'll be jumping on the show here in just a moment. Real quick, we're going to just take a short break, and then we'll be right back after this. Check it out. All right, we're back. Chris, how's it going, man? Love the shirt, by the way.
Thanks, man.
That's a great shirt.
Yeah.
Chris, the market got what it wanted, and then the market sold off. What?
Are you surprised?
No, at this point, no. But I was making the point, and I want to get your take on it too. But I'll just share my thoughts on this. I think the market bought the rumor that the CPI report was going to be good, and it had limited upside clearly because the number did pop the market, but the upside quickly erased itself. It just kind of came back flat. I think we might have just been in a state where we melted up into this report, and CPI was always going to kind of give you limited upside. I mean, obviously we're speaking with hindsight, so I can say that now, but I mean, is this market just, the standards just so high for it right now that it just doesn't even care that a good CPI print comes in?
Well, I think it was kind of front running the CPI as is. I mean, we saw some forecasts coming out last week, and everyone was looking for the improvement of CPI data. Baidu, I want to come back to in just a moment here, but a couple of things on the higher time frame. So, I've been watching all week to see if I have some big gamma levels to play. This is starting to fill up here at 565 a little bit. This might not be a bad. I mean, well, I want to see what it costs me, but if I did a 565 for, let's say, Friday tomorrow, let me see what that looks like right now. I've got some calls I'm trying to roll. Baidu is ripping to the upside in a good way. I own the shares around $90, and I'm uncovered in my personal account, and I've got clients that are covered up to 110. I'm looking to roll those out. I'm going to roll those out and up and try to get as much out of Baidu and Bob as I can. If those stocks are cooperating, I think there's a lot of good upside in those. Let me go to July 12th.
So you're going in on the China side. I mean, China's just to give some context here. You got BABA up 3%, Baidu up. So market's clearly ripping. Oh my goodness, Baidu's up 6% today. Okay.
And look at did you look at the Russell?
Yes.
Look at the Russell.
Yes.
Okay. That's the one. It's one index. It's one index. It's like, what have we been talking about? This potential small cap rate cut catch up trade. And I don't mean that on your fries. I mean catch up as in the IWM has 20+% to hit all time highs. And if this is going to be the trade where the market's finally like, look, 81% probability now the Fed watch tool is showing the rate cut in September. Small cap could be the big beneficiary. You and I have talked about it. Nick, Frank, and I've talked about it. This could be that consumer beneficiary cut, right?
Well,
good for small caps, good for small business, good for interest rates, good for housing. Like this is a good thing. Whether the market responds positively to price, we don't know yet, but I think this is still what's been anticipated.
Well, the thing is, Chris, I gotta point out where I was at yesterday, because it clearly has not been the only thing yet, or not yesterday. A couple of days ago, I mentioned that my only exposure to the markets on a trading basis right now is XLK. So I am only long technology, which ended up being fine. It's still, my perspective has been this: if the market's going to rally, tech needs to participate, and if the market's going to broaden out, tech still needs to participate, in my opinion. But it's also the one that's like the safe trade that's been working. But today, I'm happy to see, although I am only in technology, I don't have any IWM. I'm very happy to see the Russell participating. I'm happy to see this inflation report to the rate sensitive parts of the market was good news. 3% for the Russell. I want to see it 3% a day for a month straight now. That would be remarkable, because then it would say, okay, we may have dodged. It's possible, Chris. This is the question today. I think that is so important. Are we going to dodge or not the rate cut problem that we've talked about in the past? Like if they wait too long and inflation stays stubborn, we could see the inflation hurt the consumer so bad that we enter an economy slowdown into a recession. But is it possible that we thread the needle here, Chris? I mean, is it possible? Or is this going to lead to a melt up that ultimately leads to, I don't know. Yeah. It's tricky. I've got long gold, long tech. So if you actually looked at what I'm doing, I don't know, right? Because I'm long the scared part, but I'm long the risk part. And I'm just saying, I think rate cuts are coming. I like both those areas. So I'm not sure.
Well, so one thing I will say, so it's taken a lot to be like, I'm kind of confident we're about to have a pause with this rally, and here's my justification.
Okay.
So if we look at our low from April, we'll change the color here. If we look at our low from April, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have 12 candles to the upside. That's not any special number, but if I go back to some of these bigger rips that we've seen, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. That's a big stretch that came out of all this, like Q4. This was the September effect 2022 rip. That was the broader market rip in 2023. If we go back to COVID, okay, which maybe you want to call it an outlier, but even from this COVID crash, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. We paused after like 12 to 13 weeks. So I think as we're sitting here at all-time highs, and also this indicator is also pretty solid. It's just a heavy, like you take out a high, here's likely to drift. You take out a low, here's likely to drift. We did have a reaction to that resistance right in April. And then of course we've looked, on just, if you bought the dip in April, awesome. But I'm looking at this, it is stretched. And so I took a chance yesterday. I shared this trade with Frank in my trading room. I am looking at a sell position out to the end of the month to see if this market just stalls or pauses for a week. That's really all I'm looking for.
When you say sell position, are you talking about playing options, or are you just talking about a short?
Options, of course, dude.
I know you never short. I don't blame you. That's the toughest trade in the book.
Yeah. So here's the trade. So my level is 57.50. That's the SPX. Okay. And so the trade looks like this. So I'm getting $1.15 on the trade. So I'm getting credit. So if price just stays where it is, I get $1.15. If price goes down, I get $1.15. Price goes down a lot, I get $1.15. If price slowly continues its melt up into my trap area, 57.50 is a 10x profit. Now beyond 57.50, I can get to 57.55 before my risk starts to accrue.
So Chris,
yep.
Let me stop you for a second. We've got 600 people in here, and options are, something that many people are interested in learning more about. If you just hit undo on your drawing for a second and bring that back up, because you had the bring that. So explain to us, like we're 7 years old, what this drawing is showing, because I know and but what are we talking about here with that skew to the downside, right? You've got risk to the upside with that drawing. Break it down like we're in a beginner's class.
Okay. So first, if you're 7, I'm going to make sure you have like a popsicle. Let's walk through this trade.
Popsicle in hand. I'm
ready. Faces and gold stars on it for you.
Yeah.
So the trade is this. It's called a broken wing butterfly. That's the fancy name for it. What this is basically you're taking a bias. You're getting paid, so it's a sell option trade, which is what most professional traders do. Is you're selling options, you're selling premium. So here's the way the trade works. We're currently sitting here. Let me change this to the SPX. This will be a little bit easier since that's the instrument that I'm trading. We're trading at 5637. Okay. So we're at 5637, and the price point that I'm looking for is 5750. Okay, now that is my trap price. So I'm basically saying, you know what? If price wants to push there, bring it. Like, bring it to me. And again, there's mechanics to this trade, but the way this trade works is I am selling a 5750 call. So I have two contracts. And I'm selling the 5750 call. Okay.
Yep.
All right. The next one that I'm doing, in order to create a spread out of this, I have to go below price. So if this is the one that I'm selling, I'm going below this at 5740, and I'm buying a call. And then I'm going above it, and I'm going to 5770.
Yep.
Now, if you did the numbers on that, this one is 10 points different, and this one is 20 points different. So the reason it's called a broken wing butterfly is because it's not symmetrical. And so I'm taking on a little bit more risk to the upside in case price blows through my trap price. So the way this works, and one thing that's really easy about options is anytime you take an options trade, you get this risk analysis graph to show you based on where price is at, here's your current position, here's where your profit zones are, here's your risk is. And so the trade looks like this, and I'll kind of color code this as well, since we're talking to 7-year-olds. Here's price. Okay, price is right here. My chart is going to look like this.
And this is your scenarios in which you're making or losing money, right? So,
correct. Yep.
So for new,
So my trade is profitable.
Yep.
All the way in here. So all of this is profitable. All of this is profitable. And then this is where it would turn risk for me. Okay. And what this looks like is because I took the trade for $1.15 credit, as long as price stays where it is or goes up slightly, it can come all the way up to 5750, which is going to be right around here.
Yep.
Actually, no, sorry, 5750 is right here. We come into this area, then I can be profitable if price stays exactly where it is, goes up slightly, goes down slightly, goes down a ton. So that is my $1.15. That's my highest probability trade. This trade is about an 85 to 90% probability. Okay.
Yep.
So that's what I expect to get out of the trade. Now, if this market is going to go up a little bit higher and try to test my levels, this is actually a profit trap for me that could pay me 8x return, 9x return, 10x return if by expiration, and my expiration on this trade is July 26th. So I'm not going all the way out to the end of the month. I'm looking to see this week's going to be the 12th, then we have the 19th, and then we have the 26th. Yeah. So the 26th is 2 Fridays from tomorrow. So what I anticipate is I'm just going to make the $1.15. That's really the trade that I'm planning on. I did this, if anybody's familiar with how the probabilities work in options, this is a 12 delta trade, which gives me about an 88% probability that this trade works in my favor. Okay. Now, if it tests the highs and tests that 5750, which means it would threaten my position, that's why I'm positioning this with that type of profit trap. Now, the truth is on that profit trap, if we get there quickly, Nick, if like right now price just blows up and we're getting to 5,700, 5,725 by next week, my trade is going to look a little bit rough. But if we are inching up like we did this week, where it's like a little bit of high,
slow move higher,
a little bit of high, a little bit of high, this trade would start to get more and more profitable as price were to threaten my 5,750. So I'm kind of, in a way, I kind of want it to get up that high, but at the same time, I don't. Does that make sense? Like that's that. Off of this,
you're okay with some upside, but you don't want it to blow higher.
Exactly.
Yeah,
exactly. So, cool. I mean, so the reason I like the trade is this is a lot different than just saying, I'm going to be bearish. Here's a bear call spread. Because if you do that right now, you're going to collect maybe 20 cents on the dollar. Well, if I do this trade, I'm giving myself that 10x lottery pick or the trap where if I'm right on this trade, I expect to make $1.15 and I walk away happy. If I'm right on this trade because price is, doing its thing and steadily melting up a little bit more and it gets into my trap zone, that trap zone, it would have to be hit with an outlier. The probability is, again, I don't want this to sound complicated. I'm not trying to talk over anybody here. I know options can seem like a crazy learning curve, but sure. I promise anybody out there, if you did a crash course with me in options, I could have you learn options within a month. Like,
well, the thing is, Chris,
those basic strategies, and
one of the powerful things about options is the name says it all. Options are just tools. They're just, if you have a perspective on the market where you think, oh, we're going to go sideways, or, oh, we're going to move slightly higher, I'd be okay with some slightly, like, you can basically just say, here's what I think is most likely to occur in the market. Here's where I'd be okay with taking a risk. And options just gives you the optionality to just go ahead and, set up trades in the direction that you like. So I do also want to ask you about something, Chris. We've got metals finally making their surge here. I wanted to ask your thoughts on it because we've got gold and silver jumping today. Meanwhile, there's so many interesting charts today. You got the NASDAQ down 0.8%. So that's interesting. But you have the RSP, the equal weighted ETF, having a remarkable day. You've got Russell having a remarkable day, and you've got metals having a remarkable day. It's an interesting story being told today. Perhaps, I don't want to say it too soon because I've been wrong on this 17 times in a row. Are we seeing some broadening?
Well, again, you're seeing the underperformance catch-up trade, and maybe the biggest detriment to these underperformers has been the high interest rate environment. So this really is this potential shift of, and not that like an Apple or Google or Amazon or Meta, Netflix, not like the Mag 7s or the Fab 3s, not like they can't continue to perform well, but this high concentration is going to force where is value elsewhere. And value is sitting in 490 stocks that have been underperforming. Like, Nick, we're up 17% for the year, and the Mag 7, the Mag 7 or the Mag 4, whatever you want to call it, it has been responsible for about 13+% of the 17% net. That's insane. That's how like ridiculously narrow this market's been. And you and I've talked about this. The Dow has been lagging, right? The Dow's up 4% compared to 17 and 25% for the S&P and the NASDAQ. The Russell has been up 1% for the year. Today alone, the Russell's up 2+% just for today. And, again, I'm hoping that this is a bit of a catch-up trade for equal weighted. So if you go QQQE, is this doing the same thing? So QQE is up, right? So equal weighted NASDAQ is up. And then you go RSP for S&P is also up. And then you look at the SPY, it's flat, right? The Q is flat. Like, so equal weighted means you have all of these underperforming stocks that are now given a chance to show, hey, look, at this rate cut thing is happening. Inflation's trending lower. Rate cuts are happening. This gives them a chance to get back out there, maybe borrow again.
And look at this, Chris, just to your point about the divergence in this market. Look at that heat map. All the big names, red. Everything else, green.
Look at yesterday. So camera 1, camera 2. This is right now, correct?
Yep.
Okay. Now flip back to my screen. This was yesterday's close. This was yesterday's close.
Yep.
Broad market, but like, who are the top performers? The same as always. NVIDIA, Amazon, Google, Microsoft, all the big names. Everything was pretty green. But the fact that, go back to Nick's screen, it's amazing to see this. It's amazing to see that. Is this profit take? I mean, Tesla's still up today. Congratulations. Tesla's now like the greatest stock in the world.
Yeah, right.
But everything else showing green. And it's going to be interesting. Tomorrow we have earnings on the financial side. So we have, let me see, I've got a screenshot here.
Yep, thanks. Tomorrow, JP Morgan.
Who are our earnings players for Friday?
JP Morgan, I'm pretty sure.
Okay, I posted, let me see my Discord here. I posted it on Monday or Sunday night.
JP Morgan, Wells Fargo, Citigroup.
Yes, all the big ones.
Big names, yeah.
Yep. Okay, so yeah, JPM, WFC, and BK is what I showed, just some notables. We only have 29 stocks reporting this week, so that's that's 3-4 big investment banks that'll be interesting. Their guidance will be meaningful. If they what's going to be interesting to read, like in their earnings transcripts, will be if this current CPI data, if this inflation news, if they're updating their final comments for tomorrow's earnings calls, that seeing rate cuts and seeing the trend of inflation, seeing the way that the Fed is possibly leaning, that they're more optimistic for increase in borrowing and increase in, I mean, who knows? There could be some optimism baked in there, which would kind of contribute to what we're talking about right now, which is a catch-up trade for the underperforming.
Yep, and you're seeing in the sectors too. You got basic materials, real estate up, utilities up. Yeah, there's tech down on the day, semis down. I mean, there's the divergence as well. You're seeing other things participate today. So, I mean, I think it could be profit taking, like you've said, Chris. Might be taken out of the big ones and put it in other places now that we officially, I would say, with this inflation number, that's a 3-month rolling average of better than expected CPI prints, PCE, PPI. Yeah. I mean, things are lining up for that rate cut story to come into play. Will it go off a cliff at some point? Maybe, but as you and I have both said many times, the party can get loudest right before it ends.
That's true.
So
very true. While we're talking about this, I want to mention Baidu. This has made a comeback in a big way. I am out of the way on this one for my personal account, but I'm in on this with some ownership. I did a ratio spread on this. I own the shares around $96, and I'm now looking to roll up and out. So I had a 110 covered call, which is fine, but at the pace this thing is ripping right now. We went for maybe the last week of trading, we went from 85 to 101. If there's going to be any follow through here, and I'll stick to just simply technicals. I know that if you see, China's uninvestable and you never know what's going to happen and they could pull the plug and they can delist this, maybe. But I'm still trading options on China stocks. And it's not everything. It's Baidu, it's Baba, which are cash cows in their tech. And I'm also in like K-Web and FXI. So I've got about 4 plays in China right now. And I'm looking at this. I mean, the technicals are looking pretty solid. If this was a falling wedge, I thought we had a legitimate breakout right there. And if we came back in to test this low and is divergent, what I'm looking for here, Nick, is if we can come back up into this high, I'm going to get pretty aggressive on this continuing up like we did here. So I'm looking for symmetry. We're just off these lows. If I can get Baidu back to 150, 160, I will be thrilled on some profits. But what I'm trying to do right now is I'm covered at 110, is I'm going out and up. So I can go out in time and up in price, and I can still do that for a credit, which helps me lower my cost basis. So I own the shares around 96. I just rolled out farther, and I lowered my cost basis by about $1.95 or so, maybe $2. So now my cost basis goes to about $94, and I'm covered up to like 125 or 130. So I'm giving myself some room to the upside. If that gets threatened, I will try to roll it again. But if not, I'll take about $35 to $40 of profit per share, which is not too shabby. So I'm trying to give myself some room. If this trade is going to go, if we're starting to see, and this is a weird thing too. We can sit here and talk about the U.S. benefit of this, like the IWM benefits and small cap and the catch-up trade. But I also wonder if non-U.S. benefits.
Sure, maybe some global stuff as well.
Yeah. What did Ivan chat about with the Japanese yen this morning? What was his commentary?
We were looking at the yen, and we were talking about how the predominant uptrend is still up, but if you do actually see the dollar kind of continue to really trend lower, the yen might be a bit of a maybe another option. I think the path of least resistance as you hit the support is still up to for now. But if you really see a shift where we break support, where we really start seeing, a continuous fall off, I think that's the thing with the yen. Everybody is seeing these dips and they're just saying, oh, they just get bought right back until it changes. So maybe we have that change in front of us. But we'll see. I think, the yen really benefiting from a weaker dollar because they're talking about potentially rate hikes at some point. And now the Fed, I would say today, is pretty decisively likely to cut rates this year. So should be interesting.
I had a trading room session earlier this morning, and we kind of played catch up on the yen crosses because the timing of this was ridiculous, right? Like you have CPI print for the US in that same 5-minute window, you had a 200 pip candle. I think I posted a message in Discord. It's like,
Yep, I saw that.
And so it does smell a little suspicious. There could be some heavy amounts of intervention here, but then I just go to the charts and I said this, it doesn't change my opinion on the yen at all, right? Like right now, the yen for today looks great. But I said, I don't know a single trader that has called this move and has not been already exposed to the yen. So the only people that are benefiting from this move are people that have been stuck in drawdowns. They're like, finally the yen's going my way.
Yeah, a little bit of a pullback.
Or it's somebody that is chasing, day-to-day price action, and they see that right after CPI, if you're looking at a currency strength chart in real time here, you see that after 5 minutes, this yen just bursts to the upside, and then you start scrambling to find a trade. Pound yen's like a go-to because pound yen is your fastest kind of volatile currency pair. So if you go to pound yen, okay, now nobody's calling this move at 208, right? Let's be honest. Like nobody's calling this move at 208. This is a 5-minute candle. But even if you're a trader that saw this move happen in real time, and you're like, okay, is there any follow through here? You take a short, you draw a fib from high to low, you get a little bit of pullback here. I mean, okay, so you fade this move. You have about 150 pips of potential here to get from the close to the low, and you've already pulled back about half that. So if you're not scalping, you're getting nothing out of this trade. Like it's a trade that nobody really saw coming outside of, we knew it could happen, we knew it might happen, but how and when?
There's no timing. It's so tricky. Yeah.
Right. Yeah. And on top of that, if you look at the charts right now, I can go through every yen pair, and I want you to look at just this. This is how simple I'm trying to keep the yen. If you don't have confirmation, like right here, that's the trade that I'd be interested in actually following through on. If the yen's going to be repriced, if there's be this big adjustment with the yen, holding rates steady at, no longer negative interest rates, maybe raising rates by another 10 basis points or something like that, would that be enough to unravel the carry trade? If it is, look out for high volatility, but look out for really clean trendline breaks. Like even though the yen is a pain in the butt to trade, and clearly this year with manipulation, it's very difficult to trade, I do think that the yen will still, when it's all said and done, when it's time to sell it, this thing will just break a trend line and go to the other trend line. Break a trend line. Go to the, I mean, once
it moves, it'll really make its move, and it'll be fast and sudden, just like it is today. This is like a taste of what the real thing will look like when that happens. So we will we'll have to see where that goes. Chris, if it's cool, I'm going to leave you for a little bit. I've got a show picking up at 11 o'clock as well, so I'm going to go take a pee break, to be honest, and then I'll be back after that. So you've got it from here for a little bit. Before I step out, guys, if you guys would like to find more information about Chris Pulver, he's got his own YouTube channel and Twitter. It's at Real Chris Pulver on Twitter, or you could find him on YouTube. We'll drop the link to his channel. Chris, you got it for a little bit. Thanks for coming on and taking over the show, man.
All right. Thanks, Nick.
See ya.
All right. Bye-bye. So let's chat some more about these yen crosses. Again, it's pretty wild. It's pretty crazy. I was even looking at like the real-time news, and we tried to find something, and it was kind of opinion-based, like, oh, right after CPI. But I mean, this is your major headline news. Nothing's really changed. Fear and greed index, that's interesting. Fear and greed index, we'll check that out on CNN. I've just got to look up, what's this? A student loan thing. Student loan forgiveness can begin. Yeah, right. Japanese yen, that'll be fun to pay for. Let's go Japanese yen. Not Swiss yen, dude. Go back. I was looking at like BOJ or JPY for any type of news headlines. All right. So, I mean, all they're attaching this to is U.S. inflation miss. It's like, well, the U.S. inflation isn't a miss. It's what we wanted to see, which is lower inflation, which is increasing the probability of the Fed rate cut. What I'm really looking for is manipulation. I'm looking to see, was there some type of intervention? There's clearly some aggressive institutional volume coming into the market on this yen stuff. There could be some unraveling here. Why is that? Because now, maybe the Fed rate cut is looking more real. I know Jerome Powell had a 2-day testimony that he said nothing. If you listen to what he said, you'd think the Fed's not going to do anything and cut rates in September. If you read the Fed Watch tool, it's 80+%. We're probably going to cut rates in September. The market's like the market's not stupid. And the market's essentially like, look, dude, we know what's going on. Labor market's softening up. We see unemployment increasing. We're seeing trends, trends to the downside with inflation. Okay, fine. Inflation is also typically lagging. Shelter is lagging. So shelter's been going lower. Rent prices have been going down. The affordability index on houses is still at these terrible levels. But this is what we've been mentioning with the potential, consumer cut, which is if you cut rates, it's just a little bit of a relief for the high borrowing costs. It's a little bit of relief to know that, look, rates are going to start cutting. If you get a cut in September, cut in December, are interest rates different? I jumped on a mortgage calculator and showed, look, here's $1 million home. Okay, where I live out here in Utah, pretty much everything's a freaking $1 million or better. So if I want to buy a house out here, the difference between a 6.9% interest rate and a 4% interest rate makes one house completely unaffordable, and the other one, it's reasonable. It's a bit of a stretch. It's not fun, but man, you're literally saving like $2,000 to $3,000 a month in a mortgage cost just based on an interest rate. So pretty crazy stuff. All right, I've got chart alarm going off here. IWM at 210. Oh my gosh. This is, all right, I got to check a couple of things here. So my P&L a day is doing pretty solid. Let me check one thing here. So I do want to look for a roll on Baidu. Let me get a couple of things accomplished here, and then I'll take some requests. We'll take a look at the markets. We'll look at the SPY and the Qs. We'll look at equal weighted. But let me see here. I need to get a couple of these trades rolled out. So I've got my shares at 110. I'm going to do a quick roll. This would be expiration, and also move this out. Okay, so I'm going to go after $1.35 on this roll if I can. Filled at $1.36. Perfect. Hang on a second. Okay. And then here, there's my roll. Okay. No exposure there. And no exposure there. Okay. So I want to double check that I have some Baidu updates. So I just did a roll from 110 to 130, collected $1.25. I just did there's no exposure on this one for Baidu. Okay. This one I did a 110 to 130 for 120. This one I did a 104 to 125 for $1.70. So I'm rolling up and out, getting lower the cost basis a little bit. This one is a 110 to 130. And then there's no exposure here and no exposure here. Trying to think. I need to get something going on Baidu for some of these trades. So let me check something here on Baidu. And then I just had a chart alarm go off on the IWM. That's another thing I need to look at. So could I do a credit spread here? Let me see what I can get for like a 90. Let's try trade. Get rid of some of these expirations. There we go. All right. So I only have 2 accounts that don't have any exposure here. So one, that one's in. So I've got 3 accounts that don't have exposure on Baidu. So I need to get something in for them. I like the trades. I think if I just did a credit spread here at 90, I'll go out far enough to see if that will pay pretty well. I'm willing to take some ownership and repair the trade. So let me go maybe out 71 days and see what a 90 by 80 looks like. Like the $1.45. I'm willing to widen this out a little bit as well. We have plenty of buying power. This one has buying power. If I bought 100 shares, that's not bad. So I could get, $1.80. That's a wild spread there. So $1.45 $1.73, $1.80. All right, I'm going to do a 90 by 70, collect $1.80. It's income for right now, and I'll play this a couple of different ways. So I'm going to do $1.80 here. See if this will fill me at $1.80. So that's 9732. 9732. Filled at $1.80. Okay. And then this one has ownership, so that one's fine. 9072. And 8051. Okay, so that's one trade, and I'm going to go out to the end of the year. So that's a September, and I'll go to December and do the same type of thing. I'll do the 90 by 80 and collect hopefully 250 on this one. So we got 250 on the same account. So this is a 9732. Filled at 250. 9072. Come on. And 8051. Both of those are working. So let me finesse these a little bit. So you can fill it at 249. 248. Fill the 248. Okay, and then last one here. 248. Oh, fill the 250. Perfect. Okay, so now I have everyone with some exposure. I need to go to IWM really quickly, and then I'll take some requests. Can I gloss over I saw a pound dollar request from somebody looking at NASDAQs. You think the housing market is really big concern? I mean, the housing market's definitely a concern when it comes to unaffordability. If you want people to spend, you want people, buying new homes, you want banks to be lending, you want banks to be tying up mortgages, you want more applications. I mean, housing's a big deal. So I think that it's in reality, a 25 basis points cut changes nothing, but you go out 6 to 12 months, the activity that this could spur along is pretty impressive. I mean, based on what we see from the Fed Watch tool, by next September, as far as I can go out, by next September, the rates are looking to be about 3.5%. So if you have a 3.5% official cash rate from the Fed, mortgages are probably looking at like maybe a 5. If it's sub 5, I think that'd be great. If anybody in the next 12 to 24 months is closing sub 5 on new homes, that's great. The problem is you close at sub 5, you're probably getting an appreciation in price by another maybe 5%, 10%, 15%, who knows? Depends on your market. Okay. You're talking about core CPI. Core CPI does not include food and energy because they like to keep it, that's like it's too volatile. It's too volatile to calculate inflation data based on that. Well, as consumers, that affects us on a day-to-day basis. I mean, I'm going to get gas today, and if I get it close to where I live, it's going to be $3.70. If I'm willing to drive 20, 30 minutes, it might be $3.40. So it's it's annoying how much we see gas prices stable and steady, and we don't really see the downside of that too much. Even during COVID, I think, what was the cheapest gas prices when futures oil went to zero? When we were at negative 30 cents in the futures market for oil, I don't remember seeing gas below $2. If it wasn't very long, right? So, all right. I need to spend some time in the IWM. I can do that a little bit later. I'm good on Baidu. I need to recalculate my break evens here. So I will do that after session. Let's talk some currencies. Let's talk some indexes. Here is the SPY on the day. So let me check one thing really quickly. Go to the 5-minute chart. Probably already started to see the price actions support this. Yep. So son of a gun. Well, I need to go to the SPY. Okay, this level is lighting up here around, it's 1,000. I think I was looking at this earlier. I had it pulled up. We just had all sorts of stuff to look at today. Going out to tomorrow, yeah, I had a 565 to the upside. It's dirt cheap now, which I'm not going to take the trade. I'm more interested in maybe seeing some follow through here. Okay, 557 would be about it's about 557 is another $2.50 lower. Let me see what that's trading for. So that'd be a put. 557 puts trading for 77 cents. Can we hit that level tomorrow? Can we hit it today? It's possible we can hit that today. I'm gonna do this out to tomorrow. I'm gonna take a trade here for 77 cents. So a 557 at 78 cents. Let's see if I can get, there we go. It's going down a little bit. We'll try it. 78, get it filled. Filled at 78. All right. So I'm in for a long put right there. Right there. So I paid 78 cents for a debit. And if price hits that today, I can tell you roughly what that's going to be trading for. So we're trading at around a 28 delta right now. And if we dropped another $2.50, so 2.50 times the 28 delta, that's another 70 cents on top of the 78 cents. I could probably realistically put in $1.50 credit and close this trade out for profit. If we fall to this level, I'm gonna set it to this. I'm gonna take this trade that I'm in and set here, trade, SPY, close. I'm gonna go ahead and set this at a $2 credit. And that'll be good till canceled. All right, so I'm gonna set it at $2. I'll monitor it. If price goes up today and it's trading at $1.40, $1.45, $1.50, mission accomplished. I'll just take the profit and move on. Okay, so I'll set a chart alarm here at 557. And then gamma squeeze. Check P&L. And there we go. Okay. All right. So I'm good there. I'll not bore you with my, live trading, which shouldn't be boring. This is what we do. So I need to tackle a couple things in my account. IWM is one of them that I have some trades on. The chart alarm just went off on the IWM at 210. And we are ripping right now, which is pretty exciting. And so I want to try to get out of the way. I think I can do a quick roll on one of my calls, perhaps. So I would like to at least see this before we start taking just full-on requests. But let me check my positions here for IWM. So I'm in IWM. I have a few positions in. Most of it is like ratio spreads, and I'm out of the way. And this thing going up is a good thing for my positions. This one is a 185 is in the money. And I have an August 16th. Let's see, what is this? That is a 185 to 200. I'm going to see if I can roll this really quickly. All right, let me figure this out. So IWM, that's an earnings play. This one I did a roll on. So I did a 200 by 210, and I have a 200 by 212. And that is a calendar spread. So to August 16th, the 200 by 212 right now is trading for 801. And as it stands right now, I would take a small loss on this trade. So what I'm going to look to do, we still have we have a month until this. So the good thing is I have some time left in this trade. If I can roll this 212, I'm going to try to roll this. So right now I could roll it out by another week. I go out further in time. I could roll it to the same strike, get $1 out of this. I could maybe roll this out to September 20th, get $2, roll it up $1, get $1.45. So this would actually let me grab a profit on this trade. I need to give it some more upside. So I think I'm going to do this. I'm going to roll it up to 215, get $1 credit for this Sell side, I'm gonna see if I can do this for $1. Give me $1. And this gives me a chance to turn that into profit in addition to net profit. So let me see if I can roll this up for $1. Sweet, got filled for $1. All right, so I'm going to try to do that for all the exposure here on the IWM. So this 200 to 212. All I'm looking to do here is roll this 212 up. So quick roll, and then roll this out. Roll this up. So last one I just did, I rolled it to 215. And there's my dollar credit. So I'm doing the same thing here, rolled up for $1. Come on. Filled at 99 cents. All right. So I need about 1 minute to do this. And just double check all my positions, maybe a couple minutes. My 200 by 212. So roll this out. So I will quick roll this out to September 20th. And then roll this to 215 for $1. So here, so the 212. Roll this to 215. And there's my September 20th. Try to get 99 cents. $0.98. Okay, good. Next up, 7634. Same trade there. Roll this out. So roll this up to 215, roll this out to a credit. All right, I'm going to try to get filled for 95 cents or better on all of these if I can. 96.97, 98.99. Filled at 98. Okay, good. Couple more through the accounts and I'm good. This one, I have the 185 by 225. That's a calendar spread. And I'm long on the 185. I'm selling the 225. That trade cost me $31, and right now it's trading for $31.57. So I'm actually positive by about 40 cents on this trade finally, and hopefully some more upside here. So this one, I don't think I need to roll anything. That is my calendar spread. That is my ratio spread. That is my ratio spread. That one's fine. Okay, so that account's okay. And then this account for the IWM, here we go. The 185 by 285, that's fine for right now. That was another 31 and change debits, or yeah, we're break even or better on that one. And then this one for IWM is same thing. So, okay, I'm good. The IWM can run. I got some wiggle room for some of the other ones that are a little bit more crafty inside of that. I had to do an adjustment. All right. So I'm good for right now. Metals are ripping. That's a good sign. I'm actually very happy that I did this yesterday. I rolled out of my GLD positions. So I had a 232.50 and a 235 covered call. I rolled out of those and took about 50 to 60% of the profit. I still lowered the cost basis. I also put in some pending orders. So now my GLD, I own the shares around 210 and they're running with no cover. So that's a good thing. Shashi, good question. Here's an easy one. Currency.strength or currency-strength.com. I'll post this in the chat. So you get this one. If you use this indicator, this updates every 5 minutes. So 5 minutes, you'll get a real-time reaction with what the currency strength is reading. So this is a good, I checked this morning and I saw interesting play on the yen. Let me make sure this is real, confirm that with charts. And sure enough, right after CPI, we saw a huge move in the yen. Okay. All right. So GLD is running uncovered, which I'm really happy with. I'm going to do one more thing here in my account, I have to log in, get the old two-step verification. And I'm gonna look to see if I can get a cover on for Baidu. I might be a little bit more aggressive in my personal account because I want to get that margin back. I'm already up. I mean, at this point, I'm probably up around $1,500 to $2,000, and so I might look to protect it and go like in the money. I'll show you that in a second. So this is the code. Let's get logged in, and I'll chat with you here. All right, and so as we're talking here, what would you like to see? Let's take a little weather report. Let's go top down. So the SPY is red on the day. Here's the SPY. I'm looking at a 557 put for tomorrow. That's a 1 DTE. In case we just kind of fade this move off of CPI news. The Qs. Okay, wow, that's a decent drop. This is a $6.50 drop on the Qs today. Whew. I'm kind of happy with that because this, like, you know, higher high on the SPY. Let me check something here. SPX. It's 1051. I center this thing around 5630. This might be a bit of a threat today. Let me check one thing. SPX, it was a 0 DTE trade. So it was about $3. I would probably just close this out for a small loss. I'm going to make an executive decision here and just say I'm going to close it, just because it's so the trade initially was a 295 credit, and right now it's trading for a 425 debit or 410 debit. I would just take the loss and not really worry about it, just in case if this gets worse to the downside. This becomes a much bigger loss. Your max risk on the trade is about $1,500. I'm fine losing $120 as opposed to $1,000. So I'm going to take a small loss at $1.15. So I'm going to note this in my tracker here. So by 1052, calling it directionally a lot of volatility. This is not necessarily what you want to see here. Now it's improving all of a sudden where you're wondering, like, what the heck is this guy talking about? So I was taking a trade this morning with a bear call spread, bull put spread. I need price to stay in the middle. Now, if price stays right where it is, and I centered this around 56.30, I got in for $2.95. So I'm only upside down now about 40 to 50 cents, which is totally manageable. Okay. I'm just going to make an executive decision, say take the small loss. So CPI and volatile day closing at 3.40 to 3.50 for a small loss. And by the end of the day, I'll still track it. I mean, this trade was worth about $45 to hit my profit target. I think that price was volatile enough today that when I centered this morning, we moved very quickly. More than likely, unless price is going to come right back here and stabilize, then it's going to be in profit. But for me to take a small loss early in the morning, it's totally manageable to have a very small loss on the strategy. So I will take the loss today and just say it wasn't great. But at the end of the day, if it proves to be right around the centered price around 56.30 again, then it's two things. It's a winner and it's net profitable. But because it was a volatile day, I'm just deciding not to do that. And realistically, I'm already short on the SPY, looking for that level to fill up. This is what I'm watching. I want to see this level get filled today. I'd love to see this thing. This has been filling up at 800, 900, 1,000 current net. I want to see this thing fill up and actually drop either today, tomorrow to 557. Find that gamma level and make me a few extra bucks. So you can see at the bottom, my put volume sentiment is 58 to 20. That's a pretty good discrepancy. The bears have the upper hand a little bit today for now. So anyway, short-term stuff there. Okay, so why is the NASDAQ down? I mean, I don't know. I mean, if I knew I had a crystal ball for everything, then we'd put all of our money in the best trade and make a fortune. But the reality is this market is overstretched. I think the market has been pricing in a better than expected inflation news. We had news this week, right? So what's it doing? We're sitting here at these highs. I just keep looking at the technicals. This market is stretched for 12 weeks from a cycle low to a cycle high. There's heavy amounts of profit taking, usually that your first or second week in July. And then the midpoint of July is usually flat to down. We go into August. There's usually profit taking in August. There's a September effect coming out of the summer. I mean, if you want a really good run in stocks, usually January to early July is a really consistent run in stocks. August, September is wait and see, and then October to the end of the year is pretty great. I'd actually be curious if there's anybody. I mean, I could probably hit up. There's a guy that I follow there named Charlie Bolello. If I could ask him, Charlie's a data guy. He uses Y charts, and if I asked him, hey, just exclude August and September forever in the stock market, I want to see if it outperforms for whatever reason. So I actually might contact him and see if he can do that. Just because if he does, I would be interested to see, like, am I into something? Because you know how there's a saying, sell and may go away. It's not true. Like, sell and may go away. The all-time performance is like 72% if you are participating in the markets from pretty much, I'm trying to think, like sell and may go away is like a May to September window. If you don't participate from May to September, if you exclude trading and you just do like October to April, that has performed to like 72% profit. Okay. But if you included May to September, you're performing at like 71%. So it's pretty much the same. You're not really missing anything. But I'm curious, if you exclude August and September only, those are historically the worst months in the market. August is like everyone's taking their final breaks and summer vacation. School's about to start. Life gets back to normal as we kick off the fall. September is called the September effect because there's a lot of tax loss harvesting. The losses being taken. People are cleaning up the portfolio and concentrating on what's been working, what's not been working, and try to have a good and strong Q4. Okay. Forex Drew says, what is your strategy? Do you have a full video about? Just check out my YouTube channel. There's a bunch of videos. I call them Trading 101. Keep it seriously simple. My YouTube channel is youtube.com/Chris Pulver. You can just search my videos, look at a Trading 101, and there's a bunch of videos. There's probably 60 or 70 videos. And again, look at the subject matter. I talk, support resistance, trend lines, easy confirmations, price patterns, adding to winning trades, managing drawdowns, trading robots. I also have like 4 option videos of just options 101. Check those out on my YouTube channel. So if it's enough to get you started, leave me a comment on those YouTube videos and I'll get back to you. Join my Discord as well. I'm here every single day. And then also with the time that I get to spend with Nick and the team with A1 Trading, I mean, you can find me on the regular. So anyway, all right. SPX going lower. That is good. SPY, hopefully we're coming down towards 557 today. Right now, my 557, by the way, is probably showing some good profit. So the 557 right now is up about 25 cents. So, I mean, it's fine. I mean, I calculated that if we hit 557 today, this should be trading for about $1.40 to $1.50. I might just take the profit today and not worry about it. I might move my stop loss to break even and see if it maintains that level and pushes further tomorrow. It's also if the money's in my hands and it's 100%, I might just take it. What up, dude?
What's up, man? I peed that whole time.
I knew it.
That's how what these live streams do to you, man. You go to pee and then you just pee for like 30 minutes.
Yep, so, pun intended, man. That's why they're called streams.
Yeah, wow. That's eye-opening. I'm doing this for a minute. Never thought of that one. That's good. Gold's up 2% today, man. I'm having a good day. That's the biggest position in my account, so I gotta brag for a second.
Dude, so as soon as you left, I did some maintenance here. So IWM, I was able to roll IWM and get I have 2 calendar spreads on IWM. So I'm at the 185 long and I had it covered to 225. That's like longer term. And then I did a 200 by 212 that I rolled from May to now to August. And so I just rolled it up and I can turn it into like maybe a $2 net credit. If we continue to go up a little bit higher through the IWM, I'll turn that into like maybe a $2 credit contract. And then my other one will be maybe worth, $5 or $6. So IWM in a big way could help me kind of come out of that little, like, it was just in a hole. It's like I'm trading long-term options, but it's like it's just
I'm jealous on it
preserving
because
valuable.
you've got that going on. Frank's got SLYG, which is I think it's like mid caps, and so you guys are on that trade. I'm looking for it. I'm gonna try and see if I can find a way to get in on that, but we'll have to see. Chris, we got another guest who's joining us here today, so I'm gonna introduce him and say hello to him. So I'm gonna relieve you of your duties here. It's your turn to go pee now. So
I was gonna say, I'll do it till tomorrow. How's that?
Yeah, perfect. All right, Chris, thanks for coming on. Again,
right.
I mentioned this earlier, but if you guys have not already subscribed to Chris Pulver on his own YouTube channel, we just dropped the link. Boom, bam. Take advantage. Free content all over the place. So, Chris, thank you very much for coming on and
for sure.
hosting for a bit.
Yep. Thanks, Nick. Have a good
All right,
day.
man. See ya.
See ya.
All right, guys, and we are bringing in a new guest today for the first time ever. It'll be fun to say hello to Diego. We'll be right back. We're going to get that set up in just a second, so stay tuned with us. Diego from South Africa, we'll be speaking with him in just a moment. Stay tuned.
Our summer software sale is happening right now, which means you can get the Edgefinder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edgefinder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edgefinder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
All right, and we are back today with Diego. Hey, Diego, how are you, man?
Good day, Chris. I'm good. Well, Nick, I'm good. Thanks, and self.
Yeah, I'm doing well, and it's good to have you on the show. So Diego, James told me he spoke with you a little bit about coming on the show, which is gonna be a lot of fun just to hear from you. I know you're more on the lower time frame side of things. You are more of a scalper. I wanted to just chat with you for a few minutes and just get your kind of rundown of what you do and what you approach. Which markets do you trade? What time frames do you trade? Give us a little information.
Okay, cool. So first of all, you know what? I have to say thank you, Nick, because I've been watching your content for quite a while, and it's quite amazing seeing that we have as much free content on YouTube. And I do think that this is what the industry need as well. And me, Diego, I am currently trading for 5 years, which I only do consider, 3 years in my journey as my actual trading. And on top of that, my YouTube channel is also turning 3 years old this month. So you know what, Nick, you gave me a nice present.
Awesome. Yeah.
So yeah, me, Diego, I only do trade the NASDAQ, and I only have 2 assets on my watch list, which is basically my DXY and obviously then the NASDAQ. So the DXY is my real-time indicator, which I use just to have some sort of an outlook on what can potentially happen on the NASDAQ. So if we are overall bullish on the NASDAQ, you know what, there's a possibility for the DXY to have the opposite reaction. So they are inverse correlated with one another. And yes, I am a scalp trader, and I am primarily focusing on my lower time frame, such as my 1 minute time frame, 2, 3, 5 minute time frame, etc. And to those who maybe wondered why price found itself having a shift towards the downside, maybe I can also answer that question today. And yeah, I would like to start off by just giving you guys maybe my trading plan on how I am approaching price. Just so that everyone who is on the live stream at least has some sort of an idea where I'm coming from when it comes down to my trading methodology. So yeah, that's it.
Yeah, no, very cool. And again, I think we have a lot of different types of traders that come on. Some people are more day trading focused, some people are more swing trading focused. So it is cool to just hear somebody who is more on the scalping side. Are you you mentioned how you approach price? You're trading the like the 1 minute and the 5 minute kind of thing, and if so, when you are looking for setups, are you more looking for trends, or are you looking for reversal setups?
Yes, I do follow the trend as well as reversals. It depends
Okay.
on what price is basically presenting to me. So if I do see that I can have my 1-to-2 ratio in, I will take advantage. So if that 1-to-2 ratio is lining up within a correction, whether it is up to the upside or to the downside, I will still take advantage of my trade. If the trade is if my 1-to-2 ratio is lining up with overall trend as well, you know what, I will still find myself taking advantage of that as long as I do have my ratio in place.
Okay, fair enough. And with your analysis, are you usually going multiple time frames or only the 1 minute chart?
Multiple time frames. I start off from my 4 hourly time frame, having just a higher time frame perspective of what is happening, and from there I will find myself moving down to my lower time frame to just adjust and see what is happening on there.
Sure.
That's correct.
Yeah. By the way, as we speak, I mean, big sell off in the NASDAQ today. There's your 15-minute chart, just a ton of red coming into this. So I guess, you'd probably be looking more, or have you been trading at all today?
Yes, I have found myself trading over the course of today. In fact, I also did make like a little video of it, like a content of it, which I will upload later onwards, or
Okay, cool.
tomorrow on my channel as well. So yeah, I did find myself taking advantage of price over the course of today.
Very cool. So, Diego, do you have, are you able to share your screen with us so we could maybe get an idea of what your charts are looking like?
Yeah, sure.
All right. Do you see the button? There's that share button right at the bottom of the screen. Okay, you got it. Perfect. Cool.
Yeah. Cool. So, like I made mention, right? If I can maybe just find myself just giving you the overall outlook of how I am approaching price, right? Just making a few notes. Maybe if I can maybe just hide my charts. So when it comes down to me on a day-to-day basis, I do start off from my 4 hourly time frame, which is basically my higher time frame, right? So if I can maybe just put this as some sort of a trading plan. So for everyone who maybe wants to find themselves also using it, cool. You know what, you can always find yourself back testing it and see if it is working for you at the end of the day as well. Right. So on a day-to-day basis, I will always find myself coming through and have a look at my H4 time frame, H2 time frame, as well as my H1 time frame. Right. So on the H1, H4, H2, H1 time frame, this is basically where I will just look for overall market direction, right? So basically just following market structure when it comes down to these actual time frame right over here. So I will be looking at market structure, when it comes down to my H4, H2, H1 time frame. So I do have this methodology where I basically look at if my H4 time frame, H2 time frame is bullish in structure, right? I basically mark them off like this. I just something like this. Let's say, for instance, it is bullish. I will mark it off something like that, right? H2 time frame as well. Just do this, maybe like bullish.
Yep. So you're looking at each one individually, trying to get an idea of what the trend is looking like before you make any final decisions.
That's 100% correct. Yes.
Cool.
So I do look at these 3 time frames and just try to determine what overall price action is telling me. So if we have 2 bullish market structure, I most probably would find myself looking for some long opportunities. If we have 2 bearish market structures, you know what, I will most probably find myself looking for some beautiful short opportunities. So to come back to the point which you have made, whether I am trading the corrections or the impulsive moves, right? So if we are, let's say, for instance, inside a bullish market, and I'm seeing that we are, like, for instance, today, right, we were overly extended towards the upside and overall structure was bullish. So what I will then find myself doing, this is where my lower time frame is coming in, right? This is when I will look at areas of liquidity on where we can potentially find ourselves taking out liquidity and then only move down, because mainly I focus on that right there, which is liquidity. So then I will find myself taking advantage of the short, which would basically open up, right? But most importantly, H4, H2, H1, I just look at my market structure, and then on my H1 time frame, and my 15-minute time frame. This is basically where I would just find myself looking for areas of liquidity. So liquidity areas, I'll find myself looking on my 15-minute time frame and my 1 hourly time frame. So I keep it quite simple. If we have an overall move towards the upside, basically being overly extended towards the upside, I want to see buy side liquidity being taken out, which is above price, to look for some shorts. And if we are moving towards the downside, if we're overly extended towards the downside, I'm basically looking for, sell side liquidity to be taken out before I will find myself then looking for some beautiful long opportunities, right? And then ultimately on my lower time frame, everything basically smaller than what we have on the 50-minute time frame. This will basically be where I will just have my entry in price. So that basically just, so my entry would be right there, right? And then ultimately, and overall, my entry methodology will basically be a pattern which look like this, for some beautiful long opportunities. So many may know it as an actual breaker, right? Also known as just a change in market structure, right? A change in market structure. So if I would have to find myself looking for some long opportunities, first thing I want to look for is my major area of liquidity to be taken out. And my major area of liquidity will basically be everything from my 15-minute time frame upwards, right? So 1 hourly, 15-minute upwards is, I think that explains itself as well. And my minor area of liquidities will be everything from my 15-minute downwards. So those are like the in-betweens where I would want to see, what's happening right there. And 9 times out of 10, when it comes down to the minor areas of liquidities, I always look for equal highs and equal lows, because 9 times out of 10, price will find itself magnituding to those relatively equal highs or relatively equal lows price will present, right? So on my minor areas of liquidity, all I just wait for is for price to take out a low, and then wait for price to take out a high, and then I will just simplify myself executing price based off the retest, right? But most importantly, the one thing that I always look out for is this over here, right? Like this correction we have found ourselves creating. It has to be, 2 or more consecutive candles, right? It shouldn't be just one candle. You can look at one, but that's a whole, I think I would need like an hour to maybe explain that one right there. But ultimately, we need to see 2 or more bullish candles right over here, right, to confirm that this is an actual breaker, right? And then the complete opposite goes for some shorts as well, right? So all I will be looking out for on my minor areas is the following. Once again, right? I want to see the high being violated, and then I want to see the low being violated. And all I'm going to find myself waiting for is the retest so that I can find myself going short, right? And once again, the exact same thing. I look at this over here, and this over here has to be 2 or more consecutive down close candles, right? Because that right there will basically be my breaker. So now you at least have like some sort of a framework of how it looks like for what I will be looking out for when it comes down to buy or selling price action, right? Now, when it comes down to our entry level and our stop loss areas, right, I like to find myself boxing out this whole area just like this, just like that. Right, like this whole little correction right there. I like to box that out like that and basically place my stops at these lows right over here. I do have like a little rule as well, right? Sometimes you will see that we do have like 10 pips which you can risk, but you know what, if you have like 10 pips, you can always give your trade a little bit of breathing space, make it maybe like 15 pips or 20 pips, and just find yourself targeting a 1-to-2 ratio on what price has, above or below price. In this case, it will be above price. And that is just a brief explanation of how I am approaching the charts on a day-to-day basis, right? And this over here, the exact same thing when it comes down to our shorts, stops above our swing highs, right? And we are targeting that 1-to-2 ratio, just like that. So do we have any questions maybe when it comes down to this before I maybe go into the charts and just try to explain like in the charts as well?
Well, Diego, that was a really good breakdown there. I think that was like super, super well explained. So I love that you were able to just kind of completely draw out with lines and show exactly what you're looking for, multiple time frame approach, and you've really found specifically your charts that you like. So you like looking at the dollar index, you like looking at the Nasdaq, and I think that there's a lot that people who are listening could have taken out of that in terms of like niching down to what you like to trade. Some people like gold, Nasdaq, dollar, crosses, commodities. You can trade all sorts of different things, but really finding your niche is really powerful. So thanks definitely for breaking that down for us and showing it. If you'd like to spend some time going through, your recent trades. I know James had mentioned that you maybe wanted to share a couple recent examples or things like that. Maybe we'll, if you're comfortable with it, maybe just let you go for 10 minutes by yourself and just share your thoughts. And whenever you're ready, we'll jump back in and check back in with you. Is that okay?
Yeah, no, that's perfectly fine. I can find myself, explaining like what find itself happening over here as well.
Whenever you're done, we'll be listening. We'll hop back in and take over the show again. But feel free, you have the stage for a little bit to share your thoughts, share some examples, and everybody in the audience will be able to learn something here. So you've got it from here for a few minutes.
Okay, thank you, my brother.
Yep.
Let's do it. And my trading session, fam. I see someone asked when is my trading session? New York Open. Okay, New York Open. Okay, so if I can, maybe, are you guys cool with me basically using the replay button? Should I use the replay button or should I just explain like what is basically happening over here? Replay is great. Okay. So let me find myself boxing out the 6 o'clock candle. So if you guys also want to find yourself back testing this, always start off from your 4-hourly time frame and box out the 6 o'clock candle, right? And as you are moving towards the downside, you can just add on, on your charts, etc. Right? So if we're going to find ourselves looking at our H4 time frame with what price is currently presenting to us, right? We can basically see that on the Nasdaq, we find ourselves having some beautiful higher highs and higher lows we have found ourselves creating, right? So with that being said, we are clearly bullish in structure, right? So like I mentioned, if I can maybe just do this for each and every single one of you, we are bullish in market structure. Okay, so scaling down to my H2 time frame, right? So if I can maybe just play price just one candle forward. Now, we do know that we had CPI, right? We had a big news event. And once we have some huge news events, that price tend to find itself stagnating a little bit, right? Consolidating a little bit. So that right there is perfectly fine, right? So we did have some consolidation happening over the course of today, like that, right? But ultimately, what we can see is that price is still somewhat bullish in structure. Higher high right over there, right? Now, what I like finding myself doing is simply looking at, if I'm going to get up my Fibonacci from this low to that high right over there, all I want to see price do is move from that actual higher high we have found ourselves creating, which is inside a premium area, to basically come down back into a discounted area, right? And if we're going to find ourselves looking at price currently, we can see that from, at the 100 to the 50%, that right there is considered as our discounted area, right? This area right over there would be considered as our discounted area. And then obviously everything above would be considered as our premium area, right? So ultimately inside the premium area, price is expensive, right? So when price is expensive, you want to find yourself shorting price, right? And when price is inside a discounted area, ultimately you want to find yourself looking for some beautiful, long opportunities, right? You guys still with me on that one? So clearly we can see that we have a beautiful shift towards the upside. Price created that higher high on the H2 time frame, right? So now let's find ourselves looking at our H1. So H1 time frame, we can literally see the exact same thing as well, right? We are overly extended towards the upside. So I am expecting price to have some sort of a pullback, right? Some sort of a pullback. But if I basically want to see price have some sort of a pullback, right, all I basically want to find myself doing is asking myself, like, is it making sense, right? Because clearly we can see that we are overall bullish in structure, but also something that we need to take into consideration is simply, you know what, we are at a high territory, right? So we don't necessarily want to find ourselves buying price when we are at a high, right? So that is also a question you always need to find yourself asking. Is it making sense for you to find yourself looking for some beautiful longs or for some beautiful short opportunities? All right. So scaling down to the 15-minute time frame, right? This is basically where I'm just going to find myself dressing up the charts just a little bit, right? And just look at liquidity over here, right, above price, and then we can find ourselves looking at liquidity below price as well. Okay, so above price, what we can basically see is, you know what, I'm gonna find myself just boxing out my turning points, right? And right over here, we can see that we did have a beautiful turning point right over here, which is coming through as our sell side liquidity, right? And sell side liquidity will always be below price. Okay, it will always be below price. And above price, we will always find ourselves having some buy side liquidity, right? So we are going to look at this little range we have found ourselves creating over here, right? So my buy side liquidity will basically come through right over there as well, right? So ultimately, we would want to see liquidity being violated before looking for some short opportunities, right? Now, this is basically where it comes in, where I made mention on the lower time frame, right? You want to look for some relatively equal lows or relatively equal highs when it comes down to price, right? Because simply price would find itself, you know, wanting to magnitude to those regions right over there. So if I can maybe just scale to my 5-minute time frame over here, right, we can basically see that price did find itself creating some equal highs right over here as well. All right, so if I can maybe just box that out like that. And to me personally, you know what, equal lows and equal highs, those are basically areas that screams out that, you know what, we do have liquidity below or above these actual areas, right? So this over here was some sort of an indication that we can potentially find ourselves having some beautiful long opportunities towards the upside before seeing some downside momentum, right? So if I can maybe just find myself forwarding price for each and every single one of you, this right there was basically the news event we have found ourselves opening up, right, during the CPI. And during CPI, right, well, with the content which I found myself uploading, you will also see that right there, right? But ultimately, we can see that price did find itself taking out our liquidity right over there. So all we're going to find ourselves doing is literally just being patient till the New York open, right? And over here, we will see that this is where we basically have our New York open. All right. So if I can maybe just remove the noise right over there. So one thing that we can see is that, you know what, liquidity has been violated, right? Liquidity has been violated. So the next pull may be back into sell side liquidity, which we are finding ourselves having right over there. But if we're going to find ourselves having an overall shift to the downside, where can we potentially see price head back into, right? So this is also important, not just to have like that 1-to-2 ratio just because, but you know what, you also do have to have a reasoning to why you would want to find yourself or where you would love to see price basically head back into, right? And over here, we can basically see that, just like I made mention, that low, lower low, higher high, which we have found ourselves creating over there, right? This whole area is now serving as a breaker right over there, to where price can potentially find itself heading back into, right? Because we can clearly see that once price had found itself having a closure above this up close candle right over there, we haven't came back for a retest, right? We haven't came back for a retest. And that's basically how I'm finding myself looking at magnets, right? When it comes down to magnets, I'm always looking for areas which is untested, because there's a high possibility for price to basically find itself heading to those regions, right? So just like that, we can see that we did find ourselves creating that breaker, closure above, never came back for that retest right over there. Okay, so this is simply where I would then just scale to my lower time frame and just simply wait for my opportunity to find itself opening up, right? Now, I do know that this is most probably a lot, right? I do know that this is most probably a lot, but that there is a whole lot of content which I simply found myself doing some live trading as well, which I also found myself, you know what, explaining everything as well. And yeah, you know, I think that if you would find yourself going through that content, you will definitely, you know what, see it so much more clear. Okay, so all I then just simply found myself waiting for is that one pattern, the one pattern I basically have shown you guys in the beginning, right? So if I want to look for some longs, this is what I wait for, right? So all I wait for is the pullback so that I can find myself going long. Okay, what do? I box out this correction right over there, because ultimately this is where I want to find myself going long from, right? Stops way below our swing lows. Okay, for the opposite, if I want to find myself looking for some beautiful shorts, what will I find myself doing? This is basically what I found myself looking out for as well, right? What are we going to find ourselves doing, or what do we want to see? We want to see our high basically being violated right over there. And then after that, we want to see our low basically being violated, right? Find yourself boxing out your correction, which we have found ourselves creating right over there. All you're going to find yourself doing is wait for price to pull back into your point of interest. And this is basically where you're going to find yourself going short from price, right? Stops way above your swing highs. All right, above your swing highs. So let us scale back down to what we have over here with price action. Okay, so looking at current PA right over here, we can simply see if I can maybe just use my drawing tool for each and every single one of you. Right, check this out. If I maybe can just do that for each and every single one of you, check that out. Right, so clearly we can see that we are having some sort of a closure below, right? But we can see that these wicks which we have found ourselves creating over here was actually the closure, right? What I like to see is a body having a closure below the last down close candle, right? A body. So do we have it just off yet? Not necessarily, right? Right there, we can clearly see that we do have a closure below the body now, right? So if I can maybe just trace up the charts, fam, listen, you can literally go into yesterday's price action, the day before's price action, last week's price action, last month's price action, the month before that, etc., right? And simply find yourself back testing this over here. Okay, so where's our correction? These down close candles, right? Box it out, just like that. Can you guys see it? It may not look as clean as, you know what, if we would find ourselves doing the drawings like this, but ultimately you guys can see that, you know what, this over here is that leg. This correction is that right there, right? Buy side liquidity has been violated. Nice. Sell side liquidity has now been violated. Nice, right? So all we are going to find ourselves doing at this point is simply wait for price to have some sort of a pullback back into this area so that we can find ourselves looking for some beautiful short opportunities, right? So that right there would be it. That right there would be serving as your breaker right over there. Stops at your high, right? Your swing high. And you are simply finding yourself targeting your 1 to 2 ratio. Now, one thing that I love doing, right? If I know that price want to find itself coming all the way down back into this breaker over here, or not that I know, right? But if I'm expecting price to come all the way down back into this breaker, I'm not going to find myself swinging price all the way back down, back into that area right over there, right? I would rather want to find myself catching some small trades on this move towards the downside, right? Because is it guaranteed that price will find itself having that shift towards the downside all the way back to that breaker? You don't know, right? You do not know that. So I like just finding myself catching some small portions when it comes down to price action, right? So with the pullback right over there, you would be triggered inside your actual trade and you would find yourself being short, right? Some back and forth with price, some back and forth with price, some back and forth with price. And ultimately, you know what, that was the opportunity which found itself happening over the course of today, right? And that right there is basically my trading model in a nutshell. And I hope you guys have like a clear understanding of, you know what I just made mention. Any questions whatsoever? What's your trading channel? All right, Nick shared that.
Hey, Diego. Sounded like you were wrapping up there.
Oh, yes, that was my trading model in a nutshell when it comes down to this beautiful pair called the NASDAQ, which I wanted to share with each and every single one of you. And we can see that we had a huge shift to the downside on this beautiful pair.
Yeah, the NASDAQ move was pretty crazy today. But I want to thank you for coming on. I know that all of our viewers enjoy getting to hear new perspectives. I hope you enjoyed your first time on the stream as well. And I think that we'll be seeing more of Diego in the future. We've dropped his YouTube link here in the chat for you guys. Just click that link. You guys can find Diego's YouTube channel where he posts regularly, showing off all of his great analysis and things like that. So Diego, I want to thank you one more time for coming on the show. And I want to thank all you guys for watching today. And we will be back tomorrow.
Thank you, James. Thank you, Nick. Thank you to the chat as well.
Great. Yep. See you guys later.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.